Good afternoon and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host P. How goes it, P?
It goes quite well, quite well. Thank you for asking. Crazy day, crazy Sunday night. Um, Happy to be here. Happy to dive into it with you.
Dude, I go to bed and then my model just decides to stop working. I
Yeah, how does it feel to be so wrong?
I honestly I feel like this story is worthy. I was at a wedding over the weekend, and at this wedding, a few people watch my show, watch this, came talk to me about Bitcoin and whatnot, and I genuinely had the conversation with such conviction that 28K, man. I'm a full believer of this 28K floor. I think it could go lower, but I'm not really buying that. Um, and within minutes, like I'm not talking hours, I'm not talking days, I'm talking minutes of me saying this to the groom and his neighbor and a couple other people. I immediately I'm at the bar and I'm like, hey, remember everything I just said like 5 minutes ago? Yeah, it doesn't mean shit because Bitcoin's under 27K right now. So that was really fun.
Yeah, that's
Um,
rough.
I checked the ego at the door. Let me say that. I know nothing other than to stack sats and just mind my own business. How are
I
you
mean,
feeling?
look, we've all been there many, many times in different ways. I think it's a bit of a cheap shot for me to, uh, grill you on your 28K bottom prediction. This is an interesting. Um, I guess I'm not sure if we would technically call what's happening with Celsius a macro incident, but I think that is a large part of this price dip. What do you think? How much of this do you think is based on the larger macro landscape versus the fact that Celsius is the second entity recently to kind of collapse, have a significant issue in terms of liquidity that has ramifications for the larger Bitcoin market?
I think what we're bearing witness to is not necessarily like on a technological basis. There's no real in my belief or understanding, there's no overlap enough to where I believe that, oh, Celsius is failing and therefore Bitcoin should fail. I think what we're bearing witness to is human emotion, and those who have money tied up in Celsius or are paying attention to Celsius and maybe aren't as familiar with the difference the differences between that network and Bitcoin's network, and you're starting to see human emotion and fear creep out. Oh shit, I can't withdraw my money that's tied up in Celsius. What does that mean to Bitcoin? Oh, Binance isn't doing any withdrawals of their Bitcoin. Like, what does that mean for me and what I'm holding? And we start to have this fear essentially create these triggering events that make it seem like everything is connected. And they are on a human level, because the error right now is human error. It's not the the network didn't shut down, the hash rate didn't drop off drastically. Like you still don't have a double spend in Bitcoin. There's nothing on a purely technical level that has failed on the Bitcoin network, but rather it's the human error that was introduced because of human emotion that's causing this.
Interesting. Yeah, I mean, to be clear, just we didn't actually say it or state it clearly, but what has happened is Celsius, which is one of the large exchanges, lend or platforms that basically promises to earn you or has promised historically to earn you yield on your Bitcoin, has frozen all withdrawals, swap, and transfers between accounts, which is crazy. Now, I have a lot of problems with Celsius and have had for years, but this is pretty dramatic. They posted a blog post last night that is titled "A Memo to the Celsius Community." And they say, "We're writing with a very important message for our community. Due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts. We are taking this action today to put Celsius in a better position to honor Over time, it's withdrawal obligations. That is a crazy statement. Basically, if you talk to a lot of maxis over the last years, people would come in and they'd be like, "Hey, but I can earn, 20% on my Bitcoin. I can earn 10% on my Bitcoin. I can earn 5% on my Bitcoin." And the only way you do that is by sending your Bitcoin to a third party, in this case, like Celsius, and then they would rehypothecate it. That is to say, they would lend it out to other people who you didn't know who those people were, and then they would pay you a small part of the income that they made for that lending operation. And the feedback, the statements that you'd get if you came into, Clubhouse, Twitter Spaces, talking to Maxis was, why would you pick up pennies in front of the steamroller? You're literally, you've got this thing, which is the most important asset that's been ever invented, and you are willing to risk it by giving full possession of that asset to someone else who you don't know, who has done some questionable things in the past, just to get a small percentage of day-to-day earnings. And we're seeing that play out in a huge way here right now. This is a spectacular blow up. And so again, just to be clear, if you have sent your Bitcoin to Celsius, you cannot access it as of right now. They haven't said anything about when they might release it. If they might release it, they're obviously implying it, but this is really bad. This is bad for the people who didn't understand, not your keys, not your coin. This is not a problem with Bitcoin, to your point. This is a problem with trusting other people with your keys. If you don't have possession of your private keys, you do not own your Bitcoin. Everything else is an IOU. If you are keeping your money, your Bitcoin that is, on exchanges, this should be a massive wake-up call. You need to learn about self-custody. You need to take radical financial responsibility for your own future, and you need to take your Bitcoin off of exchanges into cold storage so that you actually own it.
There he
Chris,
is.
what's up, man?
How's it going, guys? Streams are running well.
First off, you need to stand up and show everyone the shirt. There he is. Chris Alamo has fully transitioned. He's no longer man, no longer producer. He is half man, half Bitcoin.
You are what you eat, and I ate a bunch of open dimes, and this is what happened, guys. So you too can become like this. Just hit up NVK and CoinKite and just order a bunch and just put them down.
Did you imbibe them orally or rectally?
I'll let you guys decide which way to do it, but one of them works better than the other. So
he definitely stuck it up his butt.
Yep, for sure.
No, I got this shirt, awesome shirt from Adam Meister, the Bitcoin Meister. I was at Bitcoin Day Charlotte. It was an awesome event. It was definitely a bear market event, and what I mean by that is a much smaller crowd. There's about probably 120 people, 125 people, but majority of them pretty hardcore Bitcoiners, and there were some new people, and I feel like they got a lot out of it. A bunch of panels and talks. We're actually going to be getting a bunch of the footage from it, so when that comes to us, I'll let you guys know. We'll put it up on Bitcoin Magazine for you.
I think I don't know. This kind of sucks, but one of my friends DM'd me because I was explaining how we get our bonuses, which our bonuses are paid every quarter entirely in Bitcoin, and he just DM'd me going, "So how's that bonus you were telling me about that you got back in January? Not good."
You should have said
wait, hold on. That is some high time preference thinking.
Totally.
Because it goes in the other way,
Look,
you could do the same thing with stocks. Imagine you got a bonus in Amazon stock in 99, and then in 2001, it's worth literally a tenth of what it was, or less than that.
That's what all these kids who are our age, well, not P's, like Pete, the generation below you,
people
kids,
born
Chris
in the year
and my
1900.
We had a lot of our peers who work at tech companies who've been giving stock options for almost a decade at this point. And, in that run up in 2020 into 2021, you saw some of these kids become millionaires, and not crypto millionaires, not Bitcoin millionaires. They thought, at least, they became millionaires in a legitimate financial system. And what do? They take their stock options and they leverage that to go buy their first house or to go invest in something else and to essentially continue to upgrade and grow their wealth. What they assumed was that, oh, we crossed the $1 million threshold. It can't go back down below this. Well, the day of reckoning has come, and a lot of these kids are now getting margin called in scary ways because you just margined your portfolio on your house. I'm just it's ugly, ugly out there. I will say one line I said at that wedding, even as Bitcoin was still crashing lower and lower, I was like, look, you have the Nasdaq trading at levels that are on par with what it was in November of 2020. At this point now, I think you're back below that even, creeping towards like October, September of 2020. Dude, in November of 2020, Bitcoin was $14,000. If you look at it from that, again, we're picking and choosing a time period to look at this. And what that means is it's all complete and utter bullshit. It doesn't matter. The only time preference chart you should look at is the historical lifetime chart of Bitcoin. I had my uncle say, like, oh, dude, what has Bitcoin done in the last 6 months? To me, to my response, then saying, hey, that's a very arbitrary window. What about the last 6 years? So I'm rambling at this point, and I hijacked the conversation. And I'm the only one on screen, and I don't like that. So guys, come back. Guys, come back. I want friends.
Yeah, man. I mean, I think I don't disagree with you. I think you got to zoom out, look at the larger picture. I mean, the price is, as of right now, 23, basically 23,500, 23,500. This is a massive buying opportunity. These types of decreases in the price of Bitcoin do not happen very often. Now, there are larger macro things going on, right? This is not only about Celsius. This is about the larger economic outlook that the entire world is now coming to grips with. We're going to be talking about that in a little bit. Super excited for that conversation. Q, who is our guest?
We're going to have none other than friend of the show, Dr. Jeff Ross, joining us. To be honest, like, I originally just wanted him to come on because we had higher inflation numbers, and I was going to do a mini victory lap because Dr. Jeff Ross was on the side of the camp that really thought that 8.5 number we got 2 months ago was going to be the inflation high. But honestly, now shit hit the fan. Who knew a 0.1% increase in CPI from the previous all-time high, or recent all-time high in the last 40 years would have caused such a sell-off in everything from crypto, Bitcoin, and even the stock market? And that's the other layer, to go back to your original question, P, of like, what is causing this and why I can very confidently believe it's just human emotion and psychology and human error. Like, you have the stock market selling off at the same time. The NASDAQ broke all of the lows it made 3 weeks ago that it was like, oh, we're holding this level. Great. Yeah. No, you just undercut it. That was a bear market rally you bore witness to twice, in the stock market and in Bitcoin. So yeah, this is just human emotion. This is that moment of ultimate fear, which, that's not to say it's the bottom, but that's to say this is that generational buying opportunity in anything. Like, historically speaking, the people who in generations who end up coming out the strongest from periods of recessions, periods of downturns, were the ones who capitalized on the downturn instead of thinking with their emotions. You should be a net buyer, not a net seller right now. Just like, in my opinion, and I was pounding this drum a lot since December, like, you should be a net seller right now. And yeah, that's the way I've been playing the market.
Q, I think this brings up a great point. Like, you do not want to be forced to be a seller at the most inopportune time. So what that means is, don't over leverage yourself. If you have more than 100% allocation to Bitcoin by a lending, like using a Celsius, using a BlockFi, using one of these companies, like, don't pay your margins down. I guess in turn, if you're over 100% leverage, if you have to pay back by selling some Bitcoin in order to do that, that's a much safer spot to be at. 100% Bitcoin, but it's all in cold storage, versus whatever your leverage amount is, but being forced to sell because you don't want to. There was actually a talk this weekend that a guy was saying his brother was like, yeah, they stole my Bitcoin. He's like, wait a sec. Wait, they stole your Bitcoin? He's like, how? Did they like steal your seed phrase? He's like, I had it on Bitfinex, and like, they took all my Bitcoin out of my account. They're like, no, dude, did you have leverage? He's like, well, I may have had leverage, but like, I wanted the option to meet my margin call. He's like, no, that's not how these things work. Like, this is like, they didn't steal your Bitcoin. You got over leveraged and they won the trade, basically. So you do not want to be in that situation. I don't know if there's anything
100%.
else
I also want to be I mean, yeah, to recap. Also, the title of this room is a clickbait title, clearly, right? Bitcoin is going down in value. It has crashed from where it was on Saturday, but the outlook is overall very, very good. The incentive structures behind Bitcoin are rock solid. And another way of looking at this is, Bitcoin Tina's name is a perfect way to think about this. There is no alternative. This is an escape hatch, a lifeboat for us in a world that is inflating away its currencies at a phenomenal rate. Now we're in interesting economic times, but again, that does not change the fundamental aspects of Bitcoin that are so compelling. And to repeat what other people have said on this call, leverage is very dangerous. If you are levered, consider putting in additional Bitcoin to decrease the chance that you could get, screwed over if the price goes lower. Manage your cash flows effectively. Get more side hustles, get another job, and basically make sure that you have enough cash day to day to manage your life and you have enough for emergencies. That's always the game, whether we're talking about Bitcoin or stocks or, any other shit coin like the US dollar. You just got to manage your cash flow. But yeah, man, as I said on, go ahead.
There's that saying, the market goes in the direction of maximum pain.
Yeah, and let's fucking go.
There's no way the market, I think in a truly free market, there's no way the market should ever allow for 100x levered position to win.
I mean,
that's not a free market. No, that is a game. That is a game where you're playing with levers and adjusting it. A free market itself. 100x levered position means 100 people have to lose for one person to win. But in the system that we have created, it's not designed like that. And so what you have is a casino game. You have an exchange that has a bunch of Bitcoin on hand and says, how do you want to trade what you have off of our stack? You only have one Bitcoin, but you want to take 100. You want to say you have 100 and ramp it up in a crazy, insane way. Cool. All we're going to do is give you a certain allotment of our pool. But everyone thinks they're the special guy. Everyone thinks, I got this. I was the fucking jackass who was like 28K. I didn't have the fucking cojones to put a levered position on that. Of course not, because it's stupid. But now I'm fucking levered because all of my fucking limit orders are bought and I literally need to move money around.
Well, wait, hold on. I think that a free market provides... I actually don't have a view on whether or not a free market would... provide 100x leverage. I mean, what you said seems rational, but at the same time, the whole point of a free market is people can do whatever they want. So I think that, again, it is Celsius's prerogative now to basically create systems and mislead people in ways that basically, or I don't want to say mislead. Let's say have advertising that is that makes claims which are questionable. But everyone has to make the decision for themselves. So I think the sad thing is that this happens again and again and again, right? Every cycle we see these kinds of situations come up where people want to make a free buck, and you have to be able to, if something sounds too good to be true, it probably is. And you have to hold yourself accountable for making decisions from a financial perspective that put you in the best possible position going forward. And it is a bit like a casino, to your point. These are sometimes some of these, certainly levered positions, can be like gambling, but in a free market, people can do what they want to do and they can lose their money if they want to lose it. And it's also our prerogative to yell about it and scream about it and tell people like, no, do not use leverage, understand, not your keys, not your coin, right? That's part of the reason that Bitcoin maximalism is so important, is because, we're kind of yelling at people to try to get them to understand that they have to make these important decisions for themselves.
Okay, can I go back to yelling at the ethos? So
sure, do it.
Fine.
I was gonna actually increase your point, Q, unless you want to go yelling at the ethos first. But
Let me yell at the ethos because I want to correct something I said because you're absolutely right. Yes, a free market could, in theory, actually allow for this. What? Let's use the 100x example. All that is saying, if I take a 100x position in a purely free market and I'm able to gather that position, that means there are 100 people on the other side of that trade. You know that the stupid bet you make with your friends where you're like, yo, if I hit 3 full court shots in a row using one arm, you give me $100. But if I miss, I give you $10. That's a 10x leverage bet. So like that is how the free market would do it. You're essentially saying 100 people want to go on the other side of that bet. That's not to say that given the current market that doesn't exist. But what I am saying is Bitfinex and these other platforms that offer that are not actually wanting to take that side of the trade. So then start to think about it a little bit. If they are sitting there with 10 of these positions, but they only have 1,000 Bitcoin for that account, that means they are 10 times levered on their Bitcoin holdings on the amount of leverage positions they have offered their clients. So what do you think the account with 1,000 Bitcoin is going to do to the 10 accounts with one Bitcoin? I'm not saying
you're pointing
they're
out.
selling off to create the pain so that they win, but I'm telling you from a business financial system, someone who has gambled a shit ton, who understands the nuances and the business of actually how a casino makes its money, let me fucking tell you, Bitfinex thought they were a casino, didn't understand how a casino actually operates, that it's a lot easier if you let the other side of the bet also make the bet with you. And they're learning that lesson, and that's what's going on, in my opinion.
Wait. Bitfinex or Celsius? What are we talking about here?
I'm just talking like I'm using Bitfinex, but just like any platform that allows you to take this like levered position, they're not letting people come in and sell against that in a way to offset their losses. So the only way they can make money is to actually margin call these positions.
Well, I mean,
If
there are
every single one of these 100x positions won.
Wait. 100x positions are few and far between these days. That's not like I think we're using that. I know that we're using that as kind of an example, but I think like there are businesses that are offering loans or doing other things where they are effectively managing position size. They are effectively managing their risk. And I think, it's not necessarily that there's like one person who's taking, a 10x long and that means that there's, 9 people or 10 people who are taking the opposite position, right? There's different ways of sort of setting that up with derivatives and basically creating risk reward structures. But at the end of the day, your point is I think if I'm understanding you correctly, well taken, which is that like there's always somebody on the other side of your trade. And these entities try to set themselves up so that the house always wins either way, and it can get sketchy. So essentially, goes all the way back around. Not your keys, not your coin. Do not make the distinction. Do not make the mistake of thinking that you own any Bitcoin if your Bitcoin is on an exchange. What you own is an IOU, and that can be revoked at any time, as we just saw with Celsius. So understand your risk profile and what is going on.
yeah, no, definitely. I'm pulling in Alex McShane here. How's it going, Alex?
Oh, you should have read the chat.
Oh, my bad.
Alex, just so you know, you are now live on YouTube. This is not like Zoom. No, you can't do that.
I booted him. We're good.
Yeah, just boot him. We were
Sorry for the
testing out a
technical
new system,
difficulties,
guys.
folks. We're using
Chris,
a new system, which is higher
Appreciate it.
quality, higher resolution, higher quality audio, all that jazz. But we're still working out the kinks, clearly.
Yeah.
Chris, I want to give you the opportunity to strengthen my argument.
Yeah, so I mean, when you think of traditional banks are leveraged at 94%. So they only hold 6% of their reserves in actual dollar, or not, sorry, I said that wrong. They're leveraged 18x, I guess, or 18 or 19x, whatever the math works out. But they have 6% of reserves of actual like money in the bank. And then the other 94% is loaned out for business loans, for house mortgage loans, for car loans, whatever it may be. So technically, to Q's point, I mean, he was using 100x leverage to be very hyperbolic. But to that point, that means that like, if that's 1 in 18 winning versus 18 people losing, that's like how our traditional system is built. Like they need the 18 people holding money in the bank and like, I don't want to say making poor financial decisions. They're just trying to have a checking account and savings account. Normally, I'd say the majority of them. Now we've pushed people on the risk curve in order to keep up with inflation, or to beat that, we have to invest in things like bonds or the S&P 500 index. Bonds are falling apart, and we can even expand on this more with Jeff Ross, but it's just, you're going further and further out the risk curve. And it's the problem with having the money as a debt-based system. So what that basically means is the money is someone else's, like it's debt. It's no longer money. Even though we have our gripes with gold and Bitcoin is a 10x, at least a 10x improvement, if not more. There's an argument to be made it's a billion x improvement of gold, but it's actually money. Money or an asset or money is, I forget what the definition of it is. It's like an asset without the risk of liability, where like the US dollar is actually just debt offered in circular to everyone else. I think Dylan LeClaire and Greg Foss were mentioning this. If all liabilities were paid off, there would be zero fiat dollars in the system available left. I know it's kind of a hard concept to rationalize, but the reason that this money is able to circulate is because of loans that they create, either through houses, through, you know, all these different like business loans, all these different equity offerings and stuff like that. It's like really, really crazy to do. So yeah, just kind of strengthening Q's argument that basically like the current system we have is causing people to lose. We're seeing that in the real day. We talk about, you know, the fleeting middle class, and more people are getting poorer while the top 1% or the 0.1% are obtaining all the assets.
I dig it. I want to quickly give a shout out to Isai Tony. I told you never follow my trading advice, so you only have yourself to blame on that front. But now, you know, great opportunity for me to offer some trading advice. So last week's special guest, Bitcoin Gandalf, who I had such a pleasure meeting and chatting with, and Fiat Saruman, you aren't going down. We're gonna take you down and save Middle Earth. But besides the point, he was telling a story on Twitter where he opened a can of tuna that he hadn't eaten, or that he bought like a year ago, and then he got to thinking, of everything that I own, this can of tuna actually appreciated in price versus the cash I have, or the fiat cash I have, or whatever stocks and equities, if I hold a US Treasury, or even my Bitcoin. Like this can of tuna has actually held value better. And I want to go around the table really quickly and maybe ask one absurd thing that you wouldn't mind buying in bulk and holding. Like 2 years ago, the thing to have done, honestly, my dad and I were joking about it over the weekend. I tried to convince him, the room I am in now is my little brother's room. And I, honest to God, was like, let's go buy 3 or 4 barrels of oil when it was negative. I was like, let's just get paid to hold these barrels of oil here. Regret it. My new pick, Sriracha. Apparently the factory is having a shortage, and there's an expected shortage of Sriracha. So Isai Tone, I'm going to give you another plug that you did tag me in this, and I'm stealing this idea. But to be honest, I'm going to go stock up on Sriracha after today's episode. If I have any dry powder after buying way too much Bitcoin.
Does this have to be serious, or does it? Or you want this to be
No,
like funny?
you could have fun. Like
I mean,
I'm not going to go take a portfolio position in Sriracha. I might go buy a box of Sriracha, but like I'm not going to take a portfolio position and allocate a percent.
Q's buying futures of Sriracha. Got it. I guess realistically, a real answer for me was bullets is the first thing that came to mind. I think like, you know, just look at the appreciation of that. Like it's insane. There's not enough of them to meet demand of the market. I guess if more jokingly but also serious is kind of wheat. I know Q's been harping on it, but he's been right. So you can't. It's not a joke. It's serious. But
best portfolio position in the last 6 months has bin WEAT, wheat ETF.
Pete, to you, and then we'll cut to commercial maybe.
Yeah, sorry, I'm chatting with the plebs in the chat about the giant Bitcoin Ranch staff that I had, and I was explaining that no, I can't bring it back into camera because I had to trade the 3 kitchen knives that I had expertly taped onto the back for cans of cat food so that I could eat. But yeah, that was great. That was a great conversation with Bitcoin Gandalf. That's all I got.
Q, you want to
Cool.
send us a commercial?
So I'm unclear on what you're gonna hoard other than insect milk.
Cat food.
Oh,
High
cat food.
protein, only relatively small amount of toxins and poisons that will harm the human body. You can eat cat food for at least 6 months before you get scurvy and die of dysentery. But that 6 months will be the most cost-effective 6 months of your life. So, I always have a special cardboard box with it's like oil rubbed into it, so it's like semi-waterproof, and then 100 cans of cat food just ready to go, so that I can stack as much Bitcoin as possible in these trying times.
Love it. Sriracha, wheat, cat food. Go stock up. We're going to cut to a quick commercial break, and we'll be joined by Jeff Ross. In the meantime, go lock in your tickets to Bitcoin 2023. Use promo code FOMO and get 10% off. We'll be back shortly. What's up? We are back. As you just saw, you need to lock in your copy of the print magazine. Sorry, my headphones just do not want to hang out with me. But in the meantime, we are now joined by our special guest of the day, Dr. Jeff Ross. Welcome back to America. Welcome back to the show. How are you doing?
I'm doing awesome, Q. And Chris, P, it's great to see you guys. Thanks for having me on the show again.
You as well. How does it feel to have been right about absolutely everything? I gave you so much shit leading into Bitcoin 2022. You'd come in and you'd be like, guys, I don't know. I mean, these price targets you guys are setting. And you said this in response to me saying, 500K by conference day. It's happening 100%. Time travel, also a thing. Aliens, who knows how it's going to happen. But I was very confident. And I'm here to say, you were right about everything.
Just first of all, in case there's any attorneys listening, I definitely was not right about everything, but I did kind of get the general bearishness down, right? So
I want to take the other side of P's position. And Jeff, how does it feel to be so blatantly wrong about the inflation numbers?
Yeah, right, because it came in a little higher, right? And I thought I was saying we were at or near a peak, which by the way, I think you cornered me, because I always say I think we're at or near a peak. I don't like to say we are at a peak. So I think you cornered me and made me choose. So you're right. I was wrong. See, P, I'm wrong sometimes. And that hurts. It hurts my heart. My pride is wounded. But you got to get up, you got to put your feet back on the floor again and get out of bed and start another day. So that's what we're all doing here. Yeah, Pete, to your point though, in all seriousness, it's hard to be bearish on Bitcoin, right? I mean, it's the greatest asset that's ever been created. It's a once in a species creation. We're fortunate enough to be living in this time where we get to see the inauguration of it and the build out of the infrastructure of the Bitcoin network. And it's hard to be bearish if you have a time frame anywhere that's a couple years or more. I mean, this thing is just going to go to the moon for the rest of our existence for sure, I think. So, these short-term price drawdowns, they are what they are. Bitcoin still reacts to what's going on in the macro environment. And that's not because there's anything wrong with Bitcoin. It's because there's wrong with the way people think about Bitcoin. People still think about Bitcoin as, a risky tech stock. They still think of Bitcoin as crypto. I was, as you alluded to, Q, I was actually in Italy. I just got back from Italy a couple of days ago. It was awesome, by the way. Love their espresso. Love the Americanos they make. They're much thicker and richer than what we have here. Anything I've found in America. Every morning for breakfast, we had like meat and cheese plates, which was just fantastic too. So I was in heaven most of the time there. It was a lot of fun. Great seeing all the sights. Um, totally went off on that tangent. What was I saying? I was saying something. Bitcoin price. Oh, I know what I was going to say. I was wearing a Bitcoin shirt like I always do out in public, and I was with this tour group wearing that. So of course people corner me. Nobody knew who, nobody knew that I was Twitter famous. They just thought I was some regular pleb, which is great. And so I was just hanging out, chatting with people about Bitcoin, and literally 100% of the people I talked to either view Bitcoin as a super risky, energy wasting thing that's going to get shut down by the government and go to zero. And then the other side of the people just think of Bitcoin as crypto. They don't see any difference between the two. They can't understand that there is a difference. And even though I take time explaining to them, their eyes glaze over, they get bored, and we go back to talking about the Colosseum in Rome and things like that. So I wasn't super successful orange pilling over there, but I think we have a very long way to go as far as Bitcoin education goes. That gives me optimism.
Yeah, I think it's interesting. I mean, you are an incredibly eloquent speaker, and extremely intelligent, but that is not enough, right? There is so much money that is being dumped constantly into advertising for shitcoins and, shitcoin casinos. And it's difficult as an individual or even a media network, as Bitcoin Magazine is, to, combat that constantly. It's a bit of an uphill battle, but we're getting there.
Yeah. Right, because we have a $0 marketing campaign, right? And we're going against venture capitalist-backed marketing campaigns for the quote great technologies of crypto, and it's not anything about the technology. It's actually just about marketing. I love to say this, that Mark Twain, I think, was credited. He said something like, "What is a gold mine? It's a liar standing next to a hole in the ground." And I like to say that basically all of crypto is a liar or a marketer, and no offense against marketers, but a marketer standing next to a white paper. There's basically nothing there. There's no substance to it. It's just who's going to get on the hype train and pump this thing up, and all of that stuff is just basically some sort of weird concept or white paper that's awkwardly glued to a blockchain and focused on an exit strategy at the expense of the poor saps who speculated in it. So I have no love for it. Obviously, I'm a former altcoiner myself, so I'm not hard on people who do that. I'm just literally out here trying to protect people from doing what I did back in 2016 through 2018. But man, just focus on Bitcoin, figure out what it is, figure out what makes it different, figure out that it's just simply better money for a better world, and you'll do really well.
I want to
Yeah, I think that's a
ask,
great. Go ahead, Q.
what was your altcoin of choice?
Back then, so I mean, I got to plead ignorance. I was stupid, and this was before Bitcoin Twitter existed. I didn't know anybody who knew anything about Bitcoin, and so I was like, following some new. First of all, I always like to make this very clear too. This had nothing to do with Vailshire, nothing to do with my investment business or my hedge fund. This was me personally, like dabbling in this space and trying to figure it out for myself. So I got to make that clear. So when I was dabbling in it, I had no idea. I just thought, well, Bitcoin's cool. And then like most people do today, I was like squirrel and saw that, hey, these cryptos can, if Bitcoin can go up 10 or 100x, these cryptos can go up 1,000x, And I didn't know, and I, again, pleading ignorance and stupidity, had no idea when the blockchain war was going on. I didn't know if Bitcoin Cash was going to win. I heard the marketing that Litecoin was the silver to Bitcoin's gold. I'm like, well, that sounds pretty good to me. And Ethereum, this Vitalik dude, he seems like maybe he's kind of pretty smart. So, and so basically that was my speculation strategy, was kind of like venture capital, put a little bit into everything. The difference back then is, if you guys remember, I don't know if you were around back then, but on the exchanges, you had to sell. Everything was trading in pairs with Bitcoin almost always as the base pair. So I had to sell my Bitcoin to get into that other stuff, which was the huge tragedy, because by 2018, when everything crashed, I had zero Bitcoin, and I had a ton of these. Thank you. The school of stupid, right? So, but a ton of cryptos that dropped then 90 to 99%. And I learned a really good lesson. And then on top of that, because I had sold my Bitcoin like late 2017 to buy these other cryptos that were going to go up another 1,000x, right? I had to pay taxes in 2018. So then everything crashed, and then I had to pay taxes on those 2017 gains, and I had no Bitcoin to show for it. So I learned a lot, and that's why I feel like I have a real heart for these people that are doing this now. And I'm just like, you guys, like, I'm not coming down, and I'm not some like toxic dude. Like, I'm literally here trying to help you. Please learn from my mistakes and don't do this. So it is what it is.
Yeah, well said.
I love it. Like, I love having you share your journey through the dark side and then back to the light. I'm curious, for those who are on their way coming back to the light, any advice you would have to help them really see the light of Bitcoin?
Yeah, it's a couple things. I think it really just comes down to education, right? You have to know what it is that you own. And I say this all the time, like, Bitcoin is simply better money. Bitcoin and crypto have nothing to do with each other. So take the time to find out why. And I think what it really comes down to is answering the simple question, which is actually enormously complex, but it sounds simple. What is money? And going through the history of money, and then why money is what it is today. Why is government in control of money? What is fiat money? Why does a dollar bill have a dollar's worth of value? Because by decree, fiat, it has value. It's backed by the US government. Is it a good thing that the government is in control of money? Most people just accept that as normal, and that this is how it should be. We should look back in history and say, is that how it always was? Does it need to be that way? What if we could create a better money? I would argue that fiat actually isn't even money. It's just currency. The actual money that existed for the last, many millennia plus was gold. Gold has served as an excellent, stable store of value for thousands of years. So kudos to gold for doing that. But because we now live in this digital age, we've actually been able to perfect money, and that is called Bitcoin. So basically, all of the great things that gold has about it, Bitcoin does that, and does it usually 10x or 100x or more better than gold ever did. So gold is just intrinsically wonderful money for the digital age, and it incentivizes the world and people to do great things and to think long term and to build wonderful projects and all this kind of. We can get into the philosophy of Bitcoin, but it really just comes down to what is money. So I would ask you, if you have been, like me back in 2017, 2018, you got wrecked in crypto. Many people have recently. Seriously, please, like, take the time to learn about Bitcoin and learn about why Bitcoin is not crypto, and Bitcoin is going to change the world, and Bitcoin is worth saving for the long term, and crypto is not. I don't care if you want to speculate in crypto, that's fine. It's a free market, do whatever you want, but please save in Bitcoin.
You're better off betting on Warriors money line tonight and Steph over 3.5 3-pointers than any of these
Absolutely.
shit coins. But I'm not
Absolutely.
reading you my full bet slip. That would also include a bet on Clay, Draymond, and I have some unders on the Celtics because fuck the Celtics. Sorry, I got distracted. Had a moment. I got really excited that I'm pretty sure Jeff Ross watches this show so much that he took my words out of my mouth and said them to all you guys. So I hope it resonates better that he said it. But seriously, go understand and ask the question of what is money. And you'll never be able to look at the dollar, stocks, Bitcoin, or shit coins the same once you really go down that rabbit hole the way he's described. P, unless you had anything else you wanted to ask really quickly. I wanted to go full smooth brain for a moment here. Cool. So, as everyone who has, if you're watching this, you know Bitcoin price is what, below 24K. I can't see P's block clock, but I've been smashed by and everything. We see the Nasdaq undercutting new lows. We're seeing a lot of things give out. I want to present to you, Jeff, the question that P kind of asked me. What is it? What is the event, in your opinion, that's causing this just general sell off in all markets?
Yeah, I mean, I just tweeted this before I came on the show. It's all about the macro, stupid. I think that's an old thing people used to say. Something. It's all about this, stupid. So it really is, right? We've been talking about this tsunami that was coming. I've been just blathering on and on about it since January, since I figured it out. And back January, February, March, I was saying, yes, it's ugly now, but we haven't even hit the rough patch yet. And now I would say we're in the rough patch. This is the soul sucking moments that it just crushes people, right? And so, like, if you've had any leverage in anything, if it's stocks or bonds or commodities or Bitcoin, hopefully you're not leveraging your Bitcoin, but if you have, you've probably gotten margin called, which means they come in the company, they're trying to preserve themselves, so they buy the contract that you signed that you probably didn't even read very carefully. They came and took your Bitcoin from you so that they could stay solvent. And this is how people lose lots of money very quickly, and you get these capitulatory events where people just puke and they hit the sell button and they're panicking and they're watching their retirement savings just go down the tubes. And they're like, crap, I thought I was going to retire in 10 years. Now I'm going to work forever until I die. These are the kind of moments that happen in these kind of macro situations. So, the last shows that I was on like a month or two ago, I was giving people a reason for how I could be optimistic based on what was going on. And my optimistic case was and you alluded to this earlier, Q, if inflation had truly peaked and then we were starting to see by now inflation dipping down into, say, the 7%, maybe 7.5% CPI, that would suggest to the market that inflation is no longer spiraling out of control, that the Fed would not have to be so dang hawkish, that they wouldn't have to raise rates so fiercely and remove liquidity so intensely. But that's not what we got. If we would have gotten that, I think we would have seen a nice surprise to the upside in risk on assets. Stocks, growth stocks, small cap stocks, things like that. And Bitcoin, the market still sees Bitcoin as a risk on asset, even though it's not. That was my case for how could we see a silver lining. I will just tell you guys, I'm just bearish. I'm just flat out bearish. I don't see any good news at all coming right now. So with the caveat, we've had a massive drawdown in the last week. Like, these are severe reactions, right? We've seen like capitulation in like tech stocks, capitulation in small cap stocks. Bitcoin's getting hammered, crypto's getting destroyed. Celsius, is on the edge of solvency right now. Things like that. We may have a short-term relief rally. When you see that, things don't go down in a straight line. They don't go up in a straight line. What they do is they zigzag. And so I always like caution people, like, we're going to see things and we're going to see relief rallies along the way, bear market relief rallies. Those fool almost everybody, especially if you're a natural optimistic person. You think, oh, the bottom's in, I'm coming back in, like, sweet, this is a great time to buy. And they go back all in and then they get wrecked again. I would just tell people that you have to respect the trend. Among fund managers, and most common people know this too, like, the trend is your friend. Don't fight the trend. Not to fight the Fed either. The Fed is literally trying to destroy demand right now. They've actively said they want to bring down housing prices. They know that they're going to bring down equities or stock prices as well. They're succeeding. And I think that this has a longer way to go because inflation is high. The Fed can't pivot, and they can't pivot anytime soon. So if that's what you're waiting for to save us, I think you're in for just a really disappointing next several months. I wouldn't believe any rally at this point unless something fundamentally changes. So again, and the major thing that I think that needs to happen is we have to see inflation come down substantially. That would suggest to the market participants that the Fed's policy is working, whether or not it's their policy that's doing this. I would actually give them credit for. They are literally destroying demand. They're literally going to bring a recession about. They're literally wrecking people's lives, destroying jobs, wrecking businesses, drastically reducing the wealth effect, drastically bringing down consumption in the U.S. So their policies are working. good for them. But it's just tons and tons of pain. So my heart goes out to people who are suffering. Prices are high, wage growth isn't keeping up with prices, and then to boot, anybody who has any kind of investment is just getting destroyed right now. So respect the trend. I'm very hedged in my hedge fund and my separately managed accounts. This is why we have a hedge fund, is so we can hedge. We're shorting things. We're up this month because the markets are down so much. But I would just continue to respect that trend until the bear market proves to be anything else. Right? It's a bear market until proven otherwise. So respect that.
Look, the bear of all bears has spoken. We have we have just a reminder, an FOMC meeting, I believe in 2 days' time, where another 50 basis points should get hiked up. Do you? We've seen some reports coming out of a potential limit to what the Fed can actually raise rates to. I mean, mind you, they're only at, I believe, 0.75, like not even at a whole percent yet. So like we have a lot of runway to go until the 3-4% range, where things can get a little dicey with the payment numbers. And you are alluding to, I think, a longer runway for the Fed. What, of all of these different numbers that get thrown out at us, we get unemployment numbers, we get CPI, PPI, DDI, LMI, whatever bullshit 3-letter acronym they could throw at us to confuse us and say, like, actually, this number says we're fine, so we're good. What is, in your opinion, maybe like 2 or 3 economic indicators that you're paying very, very close attention to right now?
So the first one, I think the most important, and this changes. It changes with the macro environment, and so it depends where we are. So right now, by far the huge elephant in the room, the 800-pound gorilla, is inflation, right? So the CPI, PPI is not as important to the general public. CPI is kind of like the front-facing number that everybody cares about, even though we all know it's not accurate, right? If it was calculated the same way it was back in the 80s, it's probably double at least where it is right now. And everybody feels that too. Like, groceries are so dang expensive, gas is so dang expensive, healthcare is so dang expensive, education is so expensive, everything's so expensive. So we're all feeling the pain right now. So CPI is the number one most important number that I'm watching. And again, we need to see that it has indeed topped, and that we're going to see it get down into the 7%. I will say, and I know I keep saying this, that we're at or near a peak. I've been saying this for several months. I still think that, and especially with everything that's going on with people are starting to get extremely pessimistic. Consumer confidence is as low as it's ever been. Stocks are way down. Real estate prices are finally coming down. All of these things suggest that it's going to, again, it's at or near peak, but it should be coming down. The one, stick in the mud, the thorn in the side for this is that oil prices just continue to hang in there, and they continue to remain high. Right now, crude oil is sitting at $121, so it just like refuses to come down. If oil remains high, that makes it tough for CPI to come down. So I'm watching that number very closely. That's probably the second most important thing I'm watching, because it's directly related to the CPI.
Why is that?
Why
are
oil?
oil prices staying up? Yeah.
So, well, the reasons you hear, so the war in Russia and Ukraine, supply side issues for sure. There's a saying though in the commodities markets that the cure for high oil prices is high oil prices. At some point, people just can't take it anymore, right? Because if you're think about it, if you're like a truck driver, you're a self-employed truck driver, you have your own truck. You might be picking up jobs right now that you're actually losing money if you take a load cross country right now, because you're paying for the gas. You can't, your margins are just basically eroding to nothing. Imagine being FedEx or UPS or an airline right now, where the majority of your costs are gas related, oil and gas related. So people are just getting crushed, and as that happens, they're like, you know what, we're just not going to do it anymore. So basically, they're just like, I can't do this. I have to basically, shut down until oil prices come down, and that helps to act as a natural drawdown basically for the price of oil. So that should happen at some point. I hope it happens sooner than later. I'm watching for that. That will be kind of the final deflationary event that I think will pull everything down in one huge, massive capitulatory event. If you see oil go from whatever 120-ish right now, and it drops down to 100 and then 90 and then 80 or something right around there, that will be a terrible moment, but that will signal that we're getting very close to the bottom, and we're finally going to bottom and then start to make our way back up again. So that's the other thing I'm watching. And then the third thing, and sorry, Q, but hey, you asked. Third thing I watch, honestly, is the price of Bitcoin. I think Bitcoin is the freest market. Bitcoin sniffs out what's going on in the economy much sooner than almost any other asset class does. It did way back in early November. It figured out there was trouble underneath the economic hood, and it started declining from the upper 60,000s. So I'm going to watch that, and I'm going to watch for signs that Bitcoin has bottomed. And that will let me know that I think we're starting to get, and that will be, by the way, we'll still be in the midst of a recession. People will feel terrible. It will be ugly. People will think that stocks and Bitcoin are going down forever, but it will start creeping up suddenly, and nobody will believe it. It will do this slow grind higher, and so I'm watching closely for that, and that's when I plan on adding significantly to my stash as well.
I love all of those, and we're going to unpack in just a moment. But I want to remind everyone who is watching, first on YouTube, smash that like button. When we get to 100 likes on YouTube, we will release some free sats for all of you. Some generational wealth is available. So smash that like button. There's plenty of people watching right now that will do many, many sats drops. In addition, Rumble fam, feel free to give us a quick little plus sign. And when we get to 50 rumbles on Rumble, we'll also drop some free sats for you guys over there as well. I want to talk about oil, because this has been the biggest talking point in mainstream media. This has become a talking point when you go to the grocery store. This is a talking point when you talk to your parents. This is a talking point when you talk to the guy you've never talked to before, because we're all in it. We all feel it. And what I have yet to really see, but I'm starting to see indications of, is prices of goods have not yet reflected the increased cost of transportation to take goods from one place to the other. We saw reports coming out of both Target and Walmart, who have really ramped up their online delivery services, starting to send a sign and say in their latest earnings report, hey, our margins were a little cut because of the rising cost of fuel. They're not going to just be like, oh, out of the kindness of our heart, we know this is a tough time for all Americans and all of our customers, so we're going to absorb that cost. Bull fucking shit. Guess what? Walmart owns Sam's Club. Sam's Club still sells you gas, and they still raise their prices of gas. I filled up gas at Costco. It was $5.89 a gallon at Costco. I wonder, this is a very, very speculative question. Do either of you see the potential for the US government to step in and say something along the lines of, we are capping the maximum amount you can charge for a barrel of oil at $250 or $500 a barrel, like something absurd, but still create sort of a salary cap, if you will? Do you envision something like that happening?
Well, I'll jump in first, and then I'd love to hear your thoughts too, P. I would say never underestimate the ability of the government to do something really stupid at the worst possible time. And so we've seen this all throughout history of the government doing exactly what they shouldn't have done. And a lot of it's easy in retrospect to criticize them, but I think we have so many lessons now where we've seen this happen during the Depression in the 30s and 40s, in the 70s as well, policies that they did. Anytime you do price controls, it's a losing situation. You're always, always, always going to have negative consequences, unintended from them. They mean well, right? And I don't even mean to come down on government officials, even though I'm very apolitical. I can't stand almost any of this. I hate even talking about it. But the policy decisions are so stupid, and they're so predictable, and they're for sure going to do this, and it's for sure going to cause this whole chain reaction of negative, deleterious effects on U.S. citizens. So they mean well. I actually expect them to do something like that. They'll probably campaign on these kind of things for the coming election. We're going to do price controls, and all of these things that they're going to do, canceling debt, do yield curve control on U.S. Treasury rates as well, those kind of things. Anytime you interfere with the free market, even though there's nothing free about our market, but anytime you cause more interference and more central control of it, it always has unintended consequences and second order effects that we pay for years and years and years into the future. So yes, I expect them to do stupid things like that. And yes, we will regret those kind of policy errors. So we'll see. I'd love to hear your thoughts though, P.
Yeah, I mean, honestly, I think I agree with everything you just said. I'm curious kind of where where you see us going from here, given those parameters, given that we expect, poor decisions that are kind of focused on the short term to be made, and for those decisions to have these longer ramifications. Like, how do you think that plays out in this specific cycle? And I'm also curious, this is, I guess, a separate conversation, but your thoughts on the Celsius situation, and whether what we're talking about now relates to that, or is that just truly a different topic that we can go into next?
I think it's all interrelated from a macro standpoint, right? Like, so it's the famous Warren Buffett quote that it's when the tide goes out that you see who's been swimming naked, right? So the tide is out right now. We're seeing who the weak players are, who is actually swimming naked, even though we thought they had trunks on. And there's a lot of ugliness out there. So this whole Celsius thing is just another example of that. Obviously, Terra Luna was a super easy example of that. Tragic, but obviously very easily predictable, at least among most Bitcoiners that I know. I think that this is just the kind of stuff that we see during these kind of economic situations. So high inflation, terrible economy. We got stagflation right now. People are miserable. Businesses are struggling. People are struggling. We're going to watch businesses go out of business. We're going to see some creative destruction that didn't happen since the last financial crisis, 2008, 2009. The Fed has been backstopping really, and no offense to you if you're a crappy company or work in a crappy company, the Fed has kept you alive, and there's zombie companies all over the place. A ton of companies, even at low interest rates, couldn't even cover their interest payments at very, very low interest rates. These guys are going to have to roll over their crappy debt that nobody's going to want to buy, and they're going to have to roll it over at much, much higher interest rates. They can't afford that, and they're going to go out of business. And this time, the Fed's not going to backstop it. So we're going to see companies go out of business. This is why, by the way, I think that this is going to go on for much longer, unfortunately, than most people think. I think we all have this recency bias thing where, we remember back to March of 2020 and that V-shaped recovery where all you had to do is buy at the bottom and then you quickly had 60 to 100% gains. That's not going to happen this time around. We're going to have a painful, slow grind lower. It's just going to be ugly for a long time. It's going to be the main issue of the midterm elections for sure. We're still not going to be out of it by then. This is going to stretch into 2023. I'm most interested in seeing how Bitcoin responds, right? As a Bitcoiner, I love Bitcoin, but so it's getting pulled down by all these factors, pulled down by the lack of liquidity, pulled down by the fact that so many people misunderstand it. But at the same time, it truly is by design the world's ultimate safe haven asset. It really is the greatest savings technology that's ever been created. People should be flocking to Bitcoin right now. Bitcoin should be going up, not the US dollar right now. But that just shows that we still have a long ways to go as far as educating people. I'll stop there.
Yeah, I was just you remind me of something, which is like, what's that quote? we're now fully prepared to fight the previous war. Like, everybody is building out these strategies based on what happened in 2020.
Right.
And before that, they were building, like, during 2020 crash, most people did not capitalize on that because they were building out strategies that were based on what had happened in previous crashes. And I think you're absolutely right. It seems like this is going to be a much more protracted cycle.
Right. And painful for if you're an equities investor. I dabble in stocks too. That's how my hedge fund started, as a value picking stock fund. Valuations were exceedingly high, like historical highs. You use things like the CAPE ratio, right? The cyclically adjusted PE of companies. Like, we're talking 1929 levels, 1999, 2000 levels, 2008 levels. That's what the valuations were. And so when you start from that really, really high point way up here, you have to come all the way back down to bring these valuations back into normalcy again. So not only are earnings the denominator of so you have your PE ratio, price to earnings, your earnings are declining because we're in a recession and the market conditions suck for everybody, but we're at high multiples. Some of these companies that everybody loves, we're selling at PEs, price to earnings multiples of 30, 40, 50, 60, 100 or so. These are going to come all the way back down to a more normal level. Historically, most PE ratios they average about 15, and we're still a long ways away. So we could see the stock market go down another 50% from where it is right now, and then it would be just kind of back to normal levels at that point. So and usually the way markets work is they're sort of springy, so they tend to overshoot in both directions. So we're way too high right now. We may go way past fair value and go very, very low, and that's going to be super painful for anybody who's just kind of sitting and holding on stocks. So yeah, again, I'm very bearish until something changes, and I don't know what's going to change anytime soon. To be clear, we may have like a couple days, like a bear market relief rally. I would not be surprised if that happened, like in the middle of this week sometime, possibly. But in general, the trend is just bad. The macro is bad. Everything's ugly. Really curious to see how Bitcoin responds. I hope that it responds by just slowly grinding higher. I'm still holding on to my end of the year price target, even though price targets are for fools, and I don't know why I always do this, but I can't help myself. My conservative end of the year price target for Bitcoin is $50,000 and 1 penny. And then, but please don't quote me on that, because I'll for sure be wrong. End of the year price target for 2023, so we're talking like a year and a half from now, is about 100,000 and 1 penny, and so we'll see how it goes there. But someday this will bottom. At some point we'll get through all of this. It probably won't be till early 2023, and then it's just going to be like shoot the lights out. We're going to have this massive asset inflation. QE4 is going to come on when the Fed pivots. QE4 will absolutely dwarf QE1, 2, and 3 combined, and that'll be when you want to get back into risk on assets. But we're a long ways from that right now.
We're also, it seems like, a long way from me ever taking off my laser rays, but I'm with it. I support this.
Yeah.
I'm the same way. Solidarity. I said I'm
Absolutely.
wearing them till 100K, and I'm gonna, and I keep getting made fun of, but it is what it is. Solidarity.
Absolutely. I'm excited for us to eventually breach 100K, and like my whole identity is going to come apart. Like, who am I if not a flaming hand with lasers shooting out of my eyes? Like, I'm nothing, you know? I mean, this is the fake me that you're seeing now. The real me is the Twitter profile pic. I'm excited. Yeah, that's super interesting.
Let's keep it in the realm of smooth brainness and price. You bring up your end of year price prediction, Jeff. I think it's only fair that P and I provide you with ours. I'll be a little bit, you know what? I'm going to do exactly what I did all of high school and copy off the smartest person in class. I'm going to say 50,000 flat, no 1 cent for end of this year, and 100K flat for end of
Bold
year
strategy.
year.
Very bold.
That's bold. That's bold.
I think by Price is Right
also
logic, I lose because I can't, like, you can't go over. And then I gave Jeff the, okay, you know what? I changed it. 50,002 cents.
All right, now you trap me.
It's 180 degrees. I don't understand. Why did your position change, bro? What new information has come to you?
Nothing has changed fundamentally about Bitcoin.
I remembered the rules of Price is Right. That's the only thing that changed.
Well, as someone who only watched The Price is Right once, drunk when one of my college friends was on the show, I was wrong with Bitcoin 2022. I said 500K by conference day, but I feel it. I feel it in my nethers. I feel like this year, Bitcoin 2023, 500K by conference day, 100%. Let's go. No.
100%. 100%.
Oh God, what would have to change in the world for that to happen? I can't even imagine. No,
a spot ETF.
Yeah, it's not going to do it. My dreams of 500.
What would have to happen is we'd need to bottom, and QE4 would have to happen. We'd have to see just a gargantuan Fed pivot, and then it's going to go to just bananas at that point. So the trick is, when is that going to happen? And it might actually happen by when is conference day in 2023? Do you have it?
You're trying to get us.
Yeah,
we can't tell you.
Oh, shoot. All right.
No,
well, whenever it is. Okay, but it could happen.
Not too far from when we did it.
It will be in 2023 in beep, and it will be around the time of beep, and the speakers will be beep. That's
and the
literally
location?
all I can say. Beep.
Location? Beep. All right. Sorry, I tried everybody. It didn't work. Regardless, right? I mean, short price action is for fools, right? The whole point of Bitcoin is what it's doing, and the monetary policy of Bitcoin is what makes it special. It's going to fluctuate forever, and people are always going to be just like focused on the price, like a bunch of smooth brains. And you have to not be smooth brain, and you have to think about where it's going. Is Bitcoin, the network, stronger, larger, more capable, have more use cases this year than it did a year ago or 2 years ago? Do we think it's going to continue to do that 1, 2, 3, 5, 10 years into the future? Absolutely, like literally no doubt in my mind. And is it going to be in existence and be much bigger, better, and more useful 10 years from now? Absolutely. So like if that's your view, like all you got to do, honestly, like we talk about technical stuff all the time. People always ask me for trading strategy advice, all that stuff. Just dollar cost average into it. This is like these kind of markets right now that are super choppy and volatile, and where the price is very, very low, could go lower, sure. This is like literally what dollar cost averaging is made for. Like everybody should be dollar cost averaging right now. If you even believe in Bitcoin just a teeny little bit, then put a teeny little bit into Bitcoin every day or every hour or every week or whatever your strategy wants to be. Just do that. And I can't make promises because my lawyers don't let me, but I have great confidence that the price of Bitcoin is going to be much, 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 much higher 3, 5, 10 years from now than it is today, and that you probably won't regret dollar cost averaging into it. So please consider it.
That is the softest recommendation I think I've ever heard you give.
Thank you.
Look,
Thank you.
This is a thing that your lawyers will be proud. No, but I don't disagree with the statement. Take it on its face value. It's funny. The thing that makes me the only thing that makes me anxious. Well, there's two things that make me anxious when the price goes down like this. One, what else can I sell to convert into more Bitcoin? And my lady already yells at me when I'm like, do we really need this priceless artifact from our this childhood heirloom? And she's like, yes we do. You cannot sell that. And then also there's that funny meme of I wish I could throw it up behind me, but it's like this like pack of dogs running, and then there's like a cat that's like standing behind the corner like, and it's like arched back, and then the caption is like me telling people to buy at 69K, and then it's like and yeah, just having to explain to family members like, no, hold the line, you're fine, you have you're not in any financial emergency, you were reasonable when you started to buy Bitcoin, you have funds to maintain your lifestyle and to cover everything else, but people just really want to sell things when they feel like they've lost that. Everybody loves to buy the tops and sell the bottoms.
Yeah, it's that. Go ahead.
No, Jeff, please.
But it's that fight or flight response, right? Everybody starts to panic. They see these huge red candles. They see their net worth going down. They see their retirement going down the tubes, and they panic. And they're just like, sell, 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 sell. Like, I can't take it anymore. So they sell at any price. I'm telling you guys, like for people listening who haven't heard this before, and I'm sure most of you had, literally the monetary policy of the US dollar is to print the dollar to infinity. And mathematically, when you do that, the value of each individual dollar mathematically guaranteed goes towards zero. It will approach zero. At some point, it will be zero. At some point, the US dollar will be worth zero. I promise you that. I don't know if it's going to happen in our lifetimes, but it will happen, guaranteed. In vice versa, Bitcoin, the monetary policy of Bitcoin, perfectly scarce. They can't print any more than 21 million ever, right? And as demand rises, the value of each individual unit, each individual Satoshi approaches infinity over time. Okay, so you couple those two things together, and then you look, where are we today? Right now, the US dollar is exceedingly strong. It is strong against a basket of other currencies. It's where everybody is flooding into, right? Liquidity is drying up because of the Fed policies right now. People are selling their stocks, their bonds, their commodities, their crypto, they're selling their Bitcoin to buy dollars. So they're selling that, they're owning dollars. The value of dollars is increasing. Bitcoin, which is supposed to go up in value over the long run and will go up in value over the long run, is currently way down. It's like 60% off of its highs back in November of 2021. When you have this, I'm telling you guys, this is like the most obvious trade in all of finance right now. Sell your strong dollars to buy weak Bitcoin, because over the long run, the dollars are guaranteed to depreciate and Bitcoin is guaranteed to appreciate. And so it's literally a no-brainer right now. And the fact that you feel bad about doing that, that it scares you to do that, means that this is the time to be doing that. The fact that it feels wrong and your sphincter is tight and you don't know if you're making the right decision, and not only do you think you should not buy it, but you think you should sell your Bitcoin, I'm telling you, this is the time to be greedy. Be greedy when others are fearful. Be fearful when others are greedy. Everyone is fearful right now. Everyone's calling for Bitcoin to go to zero. All these traders that don't understand Bitcoin, or it's going to go down to 10,000 or 5,000 or 1,000 or $500 or whatever they say. Ignore all of that. Understand the monetary policy of these two forms of money. One is actually just a currency, fiat currency, the dollar, and one is real money, Bitcoin. The dollar is expensive right now. Bitcoin is cheap. Trade what's expensive for what's cheap, and you will do well. Sorry, I'm lecturing right now.
That was fucking great.
Thanks.
No, we're in the class. We're in class right now. You are our professor, so
I'm just telling you guys, it's the easiest trade of the decade. I'm a hedge fund manager. I literally look at markets for a living, and I'm telling you, stocks are still expensive, and they're still going to come down. Bonds are terrible. They're super speculative. The US dollar sucks, and it's strong right now for some reason because everybody's scared and they're all buying dollars. You should be trading these strong dollars for weak Bitcoin right now. And it's so obvious and so easy. It just like drives me nuts. And so hearing people on my timeline that are selling their Bitcoin because they're convinced it's going to go down to 15 or 10,000 and they're going to buy it back cheaper. God, please don't do that. Like, just think long term, you guys. Think about what you're doing. Think about monetary policy. And it's so easy.
Yeah, I mean, the risk reward profile is
off the charts.
Unique. Yeah, it's off the charts. And it's like,
yeah.
I just never understand that mindset. Or actually I do, because people don't really understand the what's actually going on and why Bitcoin is so valuable, or many people do not. But even if you think you can time the market, and even if you are right and Bitcoin drops by another 5K and you're able to buy a little bit more, the chance of that happening is so much smaller. The chance of you being able to effectively time that, to say nothing of the tax implications, which will kill you in the end. It just doesn't make any sense.
Sell for a loss. I'm going to take the other side of this coin because...
No, wait. That's a whole different thing. But
No. P, I'm just saying point blank, if we all at the company supported our colleague Joe Rogers and didn't force him into signing our bonus checks, and we waited and sat on our hands, or even pulled an Alex McShane and sold our bonus check once we got it.
Wait.
And then bought back. Like, I'm still kicking myself for not doing that. That's all I'm trying to say.
Good God. No. The point is, that's a terrible strategy. Look, Dr. Jeff Ross he is a professional, and he is telling you that this is not an effective strategy. The ROI, the risk reward profile, is just you are much more likely to fuck it up. That's why, like, the house always wins. You know, you play the game long enough, you're trying to trade, it's not going to go well for you. For most people, there are people who are very good at it, like Jeff, who do it for a living. I am but a humble pleb. I used to try to trade stuff. Sometimes I did well. Sometimes I did very well. But overall, my ability to just randomly guess and figure out when it's going to go up versus down, it's not a game I want to play, and it shouldn't be a game that most people want to play. That's my take.
You know what I think the best strategy is for people who just have to trade and they're nervous and they're convinced they know where Bitcoin's going to go? When you have the strong desire to sell your Bitcoin, short Ethereum or short Coinbase. Take it out on the cryptos, right? Because they ride the coattails of Bitcoin, right? So they have more beta, they have more volatility. So when Bitcoin goes down 50%, these things go down 70, 80, 90%. That's how I like to do it. And that's actually fun because I feel good, when Ethereum goes down. I don't like Coinbase. I love it when it goes down. And I'm very happy to short that. So do that. So hang on to your Bitcoin, but protect your house. Like, say you're freaking out. Like, I bought it at 60. I think it might go down to 30. Dr. Jeff is bearish. Awesome. Short the crap out of Coinbase when you feel like that. And I guarantee you'll actually do better if you do that instead of just trying to time Bitcoin purchases. And it's way more fun too, because you feel really satisfied when your Coinbase short goes down 70%.
I love this. I was treating Bitcoin for the last like 3 months, I've been treating Bitcoin like a leading indicator and for the NASDAQ, and have been trading QQQ puts and calls off of what Bitcoin's price action has been. And it's been a very lucrative strategy. I cannot wait to short Brian Armstrong, also known as Alex Mashane's company, Coinbase, a lot.
Good.
Oh my God.
But be careful right now, by the way, in the very, very short term, it's really oversold right now. So it's probably going to bounce at some point, and I don't want you to go into it. And by the way, this is not individual investment or trading advice. This is just entertainment purposes only. Thank you.
This is in no way is this financial advice. However, I'm going to do
financial
everything
advice.
that Jeff Ross has just said to do with my own
Pure
personal
infotainment.
finances.
Yep, just a joke.
Yeah, I thought you were going to say something like, when you have the urge to, sell your Bitcoin, just instead of doing that, just punch yourself in the crotch. And then you'll experience the same level of pain because you're a masochist, and then you won't lose your Bitcoin.
That's also a good strategy. You could do that too.
I want to talk about QE4. I think a lot of people in this space are expecting it, and people not in the Bitcoin space as well are expecting the Fed to have to go back into quantitative easing. Let's just say that this is the last quantitative easing cycle. But what does that mean? Does that mean it's just a print into oblivion until the dollar does reach that final value of zero? Or
is that even on the table? This being the final QE cycle?
The reason I'm presenting the question like this is it's not in any way being presented like that by anyone other than me. Let me be perfectly clear. No one has ever made this claim. I am not even making this claim, but I'm just saying, and I'm borrowing from Preston Pish a little bit here. The idea that we're going to start and then stop quantitative easing is just an endless game that we have to play. So for argument's sake, rather than saying, oh, it'll be QE 4, 8, 20, 28, like this is version 10,000 of quantitative easing, instead of playing that game, let's just for argument's sake say this next quantitative easing cycle is the last one we see. What does the last quantitative easing cycle look like for the US dollar?
So I think we're in the final days of the dollar. And I like to be very clear about this because people just go off on me when I say that. I'm not saying it's going to be done in days and the dollar is going to die within days. I'm saying on the grand scale of history, from the inception of the U.S. dollar as the world's reserve currency to the when it came off of the gold standard in '71 officially and became just a pure fiat garbage currency at that point, to now. So looking over this huge multi-decade spectrum, we're in the final days of the dollar. So we're seeing it die kind of in real time. We're seeing it weaken in real time. Quantitative easing, to your point, Q, we've seen 1, 2, 3. I think we're going to have 4. It's all part of the same game, though. It's all this endless game of monetary expansion, trying to keep up with this massive credit expansion, this whole Keynesian economic experiment that we're watching. We're starting to see cracks in the foundation, and we're going to have, I think this decade is the ugly decade where everything is kind of coming to a head. So we have these huge kind of inflationary spikes of asset prices followed by these massive deflationary crashes, and then underneath everything is a stagflationary environment. So high levels of inflation, choppy high levels. We're never going back to 2 or sub 0%, 1%, those kind of things that we enjoyed for about 15 years before this. We're not getting back there anytime soon. And so even though we're doing quantitative tightening right now, this isn't going to last. It's just a charade. It's going to last for a few months or several quarters or so. And then they're going to be forced to get back to printing. Some crisis will happen that we're going to be in a deep recession. It may have to do something with the elections, maybe war related, maybe that, America is just literally just crashing and burning. And then they're going to have to turn the printer back on again. I just look at it as like they're sort of letting the money printers kind of cool down a little bit. And then they're going to turn it back on and just, put nitro in it and fire everything back up, and it's going to be just much more massive than it was before. So I just look at it, if you could take a step back, do the 30,000 foot view and look at it over decades, this is just a teeny tiny little blip where we're stopping and we're pretending to do tightening for a little bit, but it's all on this massive scale of quantitative easing. And I don't know when the dollar dies. The dollar dies the day where the majority of participants stop believing in the dollar, that it has value anymore. That's called hyperinflation. Basically, once you're like, I don't think this currency has any value, I'm going to go out as quickly as possible to the grocery store and buy bread and buy milk and buy, sardines and buy cat food. I think I heard you say earlier, P, because you have 6 months of solid nutrition before you die. That's what people are going to do when your currency dying. You go out and you buy anything that has any kind of value. Obviously, the easy answer is to buy Bitcoin. We did the same thing. The government did the same thing back in the 40s after World War II. We had massive amounts of debt. We had relatively high inflation, and they had kind of suppressed or low treasury yields. That's terrible if you're a person, and it's great if you're a government. So if you have debt that you can't afford to pay back in real money, what you want is high inflation and low interest rates, because your currency is being debased very quickly, and it makes it easier and easier for the government to pay back their unpayable debt. Last time that worked for a couple reasons. One is because we had just won World War II and everybody was feeling great and we had no competition basically in the rest of the world. It was the price we paid for winning the war basically. The second reason is that gold ownership was illegal, so there was no way to opt out of the US dollar system. If you were an American citizen, you had to basically participate in this, and you had to agree that, hey, we're going to debase our currency in order to pay back this unpayable debt. That's okay. And third, Bitcoin didn't exist. This time around, we're in the 2020s. We have the same amounts of massive unpayable debt. That we have high inflation and low interest rates. That's what they want to do. That's literally the playbook of the people who are in charge of these things. But this time around, we have gold now, which is not illegal. And more importantly, we have Bitcoin. So we literally can opt out of that financial system and all this craziness that's going on, the clown world economics. And so this time, I think it's not going to work, because people are going to be like, hey, why would I opt into this debasing fiat currency? It's literally rapidly debasing. We can watch it. I can watch prices rise right in front of our face at the grocery store or at the gas pump. Why wouldn't I just put my money in Bitcoin instead and just opt out of all this? That's what's going to happen. That's what's going to cause people to lose confidence in the US dollar currency. And it's, by the way, the US dollar is the best crack house on the crack street, to borrow a phrase from Greg Foss. The dollar is going to be the last to fall. So first, what's going to happen is we're going to see about 150 other smaller currencies, go to the garbage, and that purchasing power is going to transfer into, I think, the big three 10 years from now: the US dollar, probably the Chinese yuan. Sorry, I know people disagree with that strongly, but I think that will be a powerful currency 10 years from now. And then Bitcoin. And Bitcoin's going to be the biggest beneficiary of that. But those three are going to capture all of that purchasing power within the next 5 to 10 years. And it's just going to be kind of a crazy world in the meantime. And I really digress there. I'm sorry. So went down a tangent, a very large tangent.
You keep apologizing, man, but this is just all solid gold. Just keep going. Cut us off. Keep coming in. Yeah, I'm interested. Maybe this is not the conversation for it, but I'm curious to sort of tie it back, or to talk about, get your thoughts on the Celsius news again. Broadly speaking, like, I'd be curious to hear your overall thoughts on sort of what we can learn from that, what it means, whether you think that there is a risk of sort of market contagion, right? We saw this with Lunaterra, where we are now seeing, I don't know how many billions of dollars are being affected by the Celsius news, but there's still a lot of money that is in other exchanges that are in a similar position as Celsius. They're not the same one, obviously. I'm curious what your thoughts are there.
Yeah. So first of all, there's I was on Twitter earlier today. There's like 8 spaces going on, all with the same topic. They're all talking about Celsius and Bitcoin price right now. So I don't really have anything new to offer, but I do have thoughts on it. The first and most obvious one that I hope everybody takes away from that is when we talk about there's risk to earning a yield. I get the need, right? I come from finance. I have a strong desire to earn interest on my investments, on my cash. Money market funds. That's why those kind of things exist. Municipal bonds, whatever, other kind of bonds. Like, everybody wants to earn yield. It's normal to want that. And that's what these companies were trying to do and are trying to do. but there's definite risk and you need to be careful. And this is literally exactly what we're talking about. Like, you might be able to earn 3%, 5%, whatever on your Bitcoin or on whatever crypto you're into. But you're taking a risk when you give the keys to them to hold your Bitcoin. They can do what they want with that. It's just like the bank. We all have this naive view when we're kids that we take our cash to the bank, and they put our cash really carefully in a big, huge vault. And there's a dude with an Uzi standing in front of it, and they're going to guard your $100. No robbers are going to get in. And then anytime you want to go back to the bank, you can say, give me my $100. And they go out and they remove that little pile that they carefully left there, and they're going to give that back to you. Like, that is not how banks work. When you give your money to banks, they're like, sweet, thanks. I'm going to go invest this and do what I want with this. And I'm going to give you this little paltry interest payment to make it worth your while and make you feel good about it. This is exactly what the crypto companies are doing. When you give them your Bitcoin or whatever else you want to give them, they're like, sweet, thanks. I'm going to take this and I'm going to loan this out to, and I'm going to do other stuff with this. And I might rehypothecate it. I might do all this other stuff. And then we're going to give you a cut of our profits. And what the attraction to these companies like crypto.com, like, Celsius, like there's a ton of them, Voyager, they're all over the place. The attraction is you can earn high interest rates. The downside is there's risk. And what is the risk? We could have a bear market. We could have a tsunami macroeconomic environment that just crushes everybody, and the tide will go out, and we're going to see who's swimming naked and who really doesn't have very strong financials. And companies look great when everything is going sideways or going higher, but when things are crashing down, you learn really quickly who has weak financials and who's you thought everything was fantastic and you thought NFTs were going to go, to, infinity forever. They're worth nothing, you guys. And so the value you thought you had in your NFT collection is literally worth zero, and it approaches zero when you get into these bear markets. And that's the situation we're in right now. So we're seeing that. Will Celsius go and become insolvent? I don't know. The other things that are interesting about it, I know this has been discussed, but some kind of helpful points. Celsius, the token, is not stock. So even though it's an unregistered security and people think of it, and that's what Gary Gensler hates with the SEC, that's what he's talking about. Like, people think they own this company. Partly they have some sort of ownership in it when they own this token. You don't. It's just literally just a meaningless token. And it's like that for all of these other places as well. Voyager, and I mean, I could just go off forever. They are literally worthless and meaningless. They could go to zero. That doesn't necessarily mean Celsius, the company, will go to zero. If I had to bet, I think that Celsius will actually recover from this at some point. I don't think it necessarily will go to zero. I will say, though, when you get the financial world, when you get sophisticated fund managers who have billions of dollars and they smell blood, and they smell blood right now with Celsius, they are going to drive it down to zero. So we're going to see some solvency issues, and we're probably going to see some like really desperate attempts to raise funds. They're going to do things like forbid withdrawals, forbid transfers within Celsius. They already did that, I think, about 12 hours ago or 24 hours ago. They're trying to survive right now. They're in full survival mode. Will they survive? I don't know. I think probably they actually will, but they're going to be much weaker, and they're going to lose a lot of clients in the meantime. So full circle, be very careful about picking up nickels before a steamroller, right? If you want to earn interest on your Bitcoin and you can earn 3% on something that usually normally has a CAGR of 100 to 150% per year, knock yourself out. But just be very careful that when we have a terrible macroeconomic environment, and I think it's not going to get better anytime soon, some of these places are gonna they're gonna go out of business, and you are at risk. It's literally written in their policies. I know that what's the big one? Coinbase, who I love to short. Coinbase literally came out and said, if we have financial troubles, we get to keep your Bitcoin and you don't get it back. That's basically what they said. They can use that as their own asset. That's pretty scary stuff. And you don't even think about caring or reading about that stuff during a bull market. But when you're in a bear market, that stuff gets really important. It's kind of like fire insurance. You don't read all the details of your policy very closely, but when your house burns down, you look at your fire insurance policy extremely closely. I can attest to that because my house burned down back in 2012. So be careful. We're in a time where it's super important to be careful.
That was just like I'm not trying to be dramatic here, but that was a very, very dramatic, casual. Yeah, my house burned down 10 years ago. Moving on.
Yeah, that was a good life experience too.
Talk to us a little bit, like, we on the show, we tell everyone like self-custody, holding your own Bitcoin, getting a cold storage wallet is of the utmost importance. Um, what does Vailshire do with the Bitcoin that they purchase on behalf of their clients? Like, how does holding Bitcoin at such a large scale change? I mean, you have banks historically, you're only FDIC'd up to $250,000 in an account. So, what for right now, what does that look like in the Bitcoin space?
So Vailshire. So a couple things. So the straight up Bitcoin that we own in Vailshire currently is only in my hedge fund. So I have kind of a stash that we hold and want to never sell. So I'll get into the weeds here a little bit. Vailshire uses interactive brokers for our brokerage firm. They have third-party agreements with a company called Paxos, who has custodian relationships. So I actually, and I didn't know I was going to be asked this. So I'm not positive who the custodian is, but I did a lot of research on it and feel good about their custodianship. So our hedge fund Bitcoin that we own straight up is being custodied through Paxos at a custodian that I can't remember the name of right now. That's that. The rest of the Bitcoin ownership that we use in the hedge fund and across our separately managed accounts are actually Bitcoin proxies. What do I mean by that? So in the past, we've held Grayscale Bitcoin Trust, MicroStrategy, Bitcoin miners, things like that. So we own those as basically equities. So those are kind of standard typical equities that we hold. So that's how we gain a lot of Bitcoin exposure. I will tell you that right now, 100% of those equities are in a clear bearish downtrend. So we've been sitting on the sidelines. They're just sitting on my watch list waiting for a bottom to be confirmed. And then we'll get into owning those things. So, but for individual investors, and this is what you alluded to earlier, really recommend. I mean, if you want to try earning interest and take the risk of that with these places like Celsius and Crypto.com and Voyager and whoever else, totally fine. It's a free market. Do what you want. But please don't do that with the majority of your Bitcoin. Please be smart, you guys. Bitcoin is a savings technology. Just get it off the exchanges, put it into cold storage. It's way easier than you think it is, and there's really like kind of nothing to it. You have total peace of mind. You don't have to worry about these debacles that your life savings are going to go down the tubes. Just put it in cold storage and forget about it and go about your day.
Will there ever be, in your opinion, something akin to the FDIC insurance on banking entities, like the way FDIC insurance works at a bank? Will there be something similar, whether it's with third party custodians or with just exchanges in regard to Bitcoin, in your opinion?
Yes, but it's tricky, right? Insuring an appreciating asset is very difficult mathematically, and especially something that appreciates historically like Bitcoin has. Like it's really easy to insure FDIC insurance the dollar, which is guaranteed to depreciate over time. That's why it's actually super smart mathematically to take a long fixed rate loan out in US dollars and put that money into an appreciating asset. So if you can do that mathematically and you can swing it and you have the cash flow to pay for that, that's awesome because it gets cheaper and easier to pay off that loan year after year, especially if you're talking 30 years out. The value of that dollar is going to be down like probably at least 50% 30 years from now. So it's very wise to do that. Bitcoin is really different. It's a different beast. Like who would want to insure that, right? Like if I say sure, I'll cover your Bitcoin when it's at 23,500 right now, and then 3 years from now it's up at 200,000. Like, well, shoot, now what do you do? Like, do I really have to cover that same thing I said I would cover when it was 10x smaller? That's very difficult to do. So I think insurance products are coming. They're very expensive right now, but they're expensive for a reason, because they have to be. And so we're going to see that infrastructure get built out as well. I think there's a huge demand for that. And people are willing to pay for that, but the price is steep. And so if you want to have those kind of insurance guarantees, it's going to cut into your gains for sure, the gains you're making in your purchasing power from holding Bitcoin over the long run. If you want them insured, you're going to pay very steep premiums for that, I believe.
Sorry, we're trying to gather some questions from the audience. So if you guys are watching now, feel free to throw on whatever channel you are watching. We are streaming to Facebook, LinkedIn, YouTube, Twitter, Twitch, Rumble. I'm definitely forgetting one, but throw your questions out. We'll vet them. If you ask anything about shitcoinery, we will shame you in, I don't know, in a very embarrassing way and make you and your
We'll send you
family
to the glue
very sad.
factory.
Jeff, I want to get a sense from just what your, from a very bearish lens. I'm not saying you have to necessarily give me a number, but like, what's the bottom on the NASDAQ here? Because we're reaching levels that are like, we're now in territory that we were in September of 2020. And I'm curious if when we start to break below potentially where we were in March, February of 2020, before that original COVID sell off, if things start to become really, really scary in the eyes of the Fed and the federal government. And I need to go deal with my dog.
So where's NASDAQ going to go? Prediction. So as we know, price predictions are fool's errands, right? Where could it go though?
You almost fell into his trap.
I know. I mean, you're making me do this, and then people are going to quote me on this the next time I'm on here. So, but what do I think it's going to do? I think that it has lower to go, and I think that so right now the Nasdaq is sitting at 10,919. Excuse me. Good. Thanks. I had a cough there. 10,919. I think it could go down another 20, 30, 40% from here. Honestly, it kind of similar to the dot-com crash, 2000 to 2002. It just kind of kept going lower and going lower and going lower and going lower, and you get that multiple compression. So these things that were, like we talked about earlier, they were at a PE of 50, 60, 70. They're going to go down to 50 and then to 40 and then to 35 and then to 30. And then in the meantime, the earnings are going down as well because we're in a recession. It can just sort of keep grinding lower and lower and lower. So I think we could see, 8,000 ish, somewhere in there, 8,500 as a range. I think that's actually very reasonable. Could it go lower? Sure. At some point, it gets to be pretty cheap from a long-term perspective. I'd be interested in buying some of those things again at that point. But I'm definitely not a buyer now. Like I'm double short the Nasdaq right now in my fund, and for some of my more aggressive Vailshire clients, we're using a double short like exchange traded product right now to be extremely short the Nasdaq, and we've been very profitable so far. And I'm sticking with that trend until the trend breaks, and I don't expect it to break anytime soon.
I've got a totally random question, Q. Or go ahead. You were going to say something.
I just want to help people. We don't have charts up on the screen, but just to get a sense of where we are versus that March ticker that I brought up, we're only 10% away from the high we had in March before the COVID sell off. So a 20, 30% sell off that Jeff is describing here for you guys, that takes you deep into that COVID V K-shape recovery. Like the chart that everyone who has looked at a stock chart in the last 2 years, everyone knows that chart. 20% from here, you are in that downward motion. You are not hovering above those March levels. So just something to really think about as you see this hyperbolic nature of, well, Bitcoin's down so much. It's like, right. But it would still have been a better investment 2 years ago to the date than the NASDAQ. But I don't know, not financial advice as per Jeff's lawyer, and our lawyer has been slacking me a lot, apparently. I'm kidding, Jeff. P, go ahead, please.
What was I going to ask? They focus my mind. Okay, I got it. Jeff, you mentioned that there's going to be this moment where, the Fed is like, and foot on the gas. And then we're going to, go into QE4. You mentioned that when that happens, the asset prices are just going to explode upward. And I'm curious, when you say that's going to happen very rapidly, what kind of time frames are you imagining? Like, are we talking on like a 3 to 6 month timeline, 1 to 2 year, or something even faster than that?
Well, so when will it start? I don't think that it starts until probably like at the earliest, maybe Q4, maybe somewhere around a little before the midterm elections. The one of the FOMC members, I can't remember who it was, he sort of implied that we may pause in September the rate hikes. I think that would be a positive for risk on assets, at least for the short term. But I don't know if that's going to be enough because they could get back. It just depends what inflation is doing. So, like I said, I'm watching inflation numbers super closely. Um, Say they get inflation under control and the CPI is back down to sort of 4 to 5% by Q1 of 2023, which I could see happening by that point because we would be in like a full blown recession. There'd be no more demand. They would have succeeded, but it would be at great cost, I think, to us as Americans. And then they reverse. So what I would see happening at that point is we get our bottom in. I think Bitcoin would kind of be the canary in the coal mine to let us know that kind of the dust has settled, the coast is clear a little bit, and it would start to ramp up again. I think then we would start another kind of normal bullish cycle that could last for as long as like 2 years, 3 years. So maybe from mid 2023 into 25 or 26, we may have just another massive run up again in asset prices. And all of this bearishness will kind of be left behind. First of all, people won't believe it, and then they'll start to get on board, and then things will rip higher, and then we'll get back into that euphoric optimism that we were kind of near the end of 2021. That's kind of the time scale I look at. It's obviously impossible to predict that far out, but that's what I could see happening at this point. It will change as the facts and the data change. But so yeah, so I think that will be the time to be heavily invested again. All of my, and I'll know when that's going to happen. Here's how my cheat sheet, how I know it's going to happen. Like I said, I'm very short. The Nasdaq right now. I'm shorting small cap stocks. I'm shorting the S&P 500. I'm short mid cap stocks. I'm short, lots of things. I'm short innovation, ARC funds, those kind of things, housing, financials, all that kind of stuff. When all of those shorts stop working and I hit my trailing stop losses on those kind of things, and when all of these other like high beta, highly volatile growth kind of assets like Bitcoin miners and those sort of things, and other tech stocks like Shopify that's down like 80% from its highs, when those things finally look like they've bottomed and they start to go into bullish momentum, that's when I'll know that we can get fake outs, we can get false starts, but once that gets sort of confirmed that a bottom is in, that will be the time, like guns blazing. QE4 will be in full effect. That's where we're gonna see some just super tremendous gains at that point. And I'm looking mostly to, and it could change, but I'm looking mostly towards Bitcoin miners as being having the greatest gains the most quickly, because Bitcoin is the world's freest market. It should sniff out the changes sooner than any other major asset class does. And then Bitcoin miners, which, if Bitcoin's down 60%, these miners are down 90%, they're going to be like a quick double, and then they're going to be a quick triple, and it's going to be just astonishing. So I would look to those kind of things first. Again, not individual investment advice. This is for infotainment purposes only, but that's what I'm doing for my Vailshire accounts and my clients. And I think it's going to be a good year starting somewhere in 2023, 2024. It's going to be a good couple of years.
Very interesting.
All right, I'm trying to clarify a point I made. So I'm going to be in the Twitch chat in a moment, but we're going to take questions now. And the first one I want to throw out, in my opinion, we saw one of the best troll jobs of last week on Twitter itself by none other than Jack Dorsey, announcing Web 5, circumventing both Web 3 and the never even talked about, never discussed, never developed Web 4. What effect, if any, does Web 5 have on Bitcoin in particular, given it's Jack and Block that are going to be developing that? And what are your expectations of that versus Web 3?
Well, first of all, Web3 is just a big marketing campaign, right? It's just garbage. And so it's fine. And that's the kind of thing that happens in massive bull markets when everybody's euphoric. Everybody jumps on board. Venture capitalists pump billions of dollars into it, and then they get their marketing teams involved, and they pump, and then they dump, and then they get out and they leave, regular people holding the bag. So I hate everything about it, and it makes me mad because I come from that industry. So that's what happens though during the final stages of a bull market. We're seeing they're approaching their intrinsic value, right? Of most of Web3, the intrinsic value is 0, and we're watching things rapidly approach those numbers. I love Jack. He's just the best. He's one of my favorite people in all of Bitcoin, and I love the things he does. I love the way he trolls. I love his heart for Bitcoin, and he has such clarity of thought, and he's so far, I think, ahead of where most people are and how he thinks about things. He's a true visionary, you know. Elon Musk gets all the credit, but Jack, I think, is going to do foundational things that are like improving the world, that will improve the world for decades to come. Um, uh, Web 5, depending on how serious he was or not, to me, that's all just inevitable, right? This is what's so fun about watching this nascent asset class being built out. It's the king of assets. Clearly, we can already see this. Like, it's changed the world technology as far as money goes and saving technology goes. We just get to watch the infrastructure get built out in real time. So I think we're sort of like similar to where we were in about 1996, where the internet was. Back, you guys are both way too young. You don't remember this. I got my first email account in college. I had no idea what to do with it, and then we're like, "Ooh, I can send a message to somebody," and it would make a little noise. And when you got onto the internet, you had to log on, and it made all these crazy noises, like, you know, because you're getting on a phone line. Like, that's about where we are with Bitcoin right now. And so watching the infrastructure get built out and watching this just massive, all these massive use cases get built out, where ease of use, use cases just grow and grow, and the network itself just expands and becomes so much larger, so much more powerful, so much more unstoppable. We're going to get to watch all of that being built out in real times and on multiple layers. It's going to be to the point where it's going to be invisible. And these things where right now we're talking about things like hash rate and all this kind of, kind of computer jargon, technical jargon. 10 years from now, 20 years from now, nobody's going to be talking about that. Nobody's going to really understand how Bitcoin works the way that we understand now. And I'm a total novice as far as that kind of stuff. I'm not a technical guy. I'm not a software engineer. I don't do any coding really. The people who figured it out 5, 10 years ago, the cypherpunks and those kind of people, the Adam Backs, those guys, the Hal Finneys, they're going to be like these legendary, just geeky, amazing people that nobody could even believe that they could conceive of something like Bitcoin. 5, 10, 20, 30 years from now, everyone's just going to be using it. It's going to be seamless and it's going to be invisible. And these days of, like, we're going to look back and they're going to be teaching economics classes about how, can you believe it? Like, back in the late 1900s and early 2000s, we used to have money that was controlled by a government, and there'd literally be like this group of old dudes sitting in a room deciding on monetary policy, and we'd all sit around the TV watching and the internet watching, like, what is Powell going to say? Is he going to raise rates? Are they going to print more? Are they going to tighten? Oh, this is so crazy. Like, we're going to be like, that was insane that we did that. It's kind of like the way in medicine. Someday we're going to look back at chemotherapy. And sorry, I'm doing a real tangent here. We're gonna look back at chemotherapy and be like, can you believe we used to give people poison? Like, we literally would inject poison into their veins and try to help kill their cancer. But in the meantime, they were killing all of the healthy cells in their GI tract, and their hair was falling out, and all these crazy other side effects that we had. It's going to seem so archaic. And at some point, we're going to look back at fiat currency and be like, that was so archaic and crazy that we had such an unknowable monetary policy. And now, of course, it'll just be like, well, yeah, Bitcoin, it's just completely knowable. We literally know exactly the schedule of the Bitcoin that's going to be released all the way till 2140. And then we know that after that, it's just going to be a non-inflationary currency. It's just totally knowable. There's literally no risk to that. It just is what it is. And people are going to take all of that for granted. And in the meantime, though, it's super fun for me, just as a person, to watch the infrastructure getting built out. And then as an investor in Vailshire, in my fund, and for my clients, it's super fun to help support and figure out and determine these companies that are doing that best. And people like Jack Dorsey and people like Jack Mallers and people like Corey Clipson and the people over at Bitcoin Magazine, all these people who are sort of leading the charge and creating this whole new world order. Like, for me, it's super fun as an investor to figure out who those companies are and those people are, and get back with them and support them and invest alongside of them. So I'm having a ball with all of this. I think it's just a super fun time to be alive, even though this decade is going to be a tumultuous one. I think it's going to get worse before it gets better. What's on the other side, though, we're going to push through the doors and we're going to be in this new world on a Bitcoin standard. And I think it's just going to be so much better than the world that we're in right now, with the long-term visionary thinking versus this short-term garbage fiat plastic products, things that break after one use, all these kind of things that we're all used to, prices rising year after year after year. So it's all unaffordable. all that's going to change and everything is going to be different. It's just going to be such a better world. So I'm super excited for what's next, and I'm super excited to invest alongside the people who are making that happen, like Jack Dorsey.
I love the idea that in the same way that today we look back at something like bloodletting and we're like, wait, sorry, I don't understand. What do you mean
Right.
you'd go to a barber and they would like slit you open and be like, we're letting out the bad stuff. It's just
The bad
it's
humors.
the bad humors, you know, get them out of your body. I love the idea that we're going to look back in the future, our children's
sure.
children, and be like, in the dark ages of monetary policy.
Yeah.
It'll be like monetary policy ghost stories.
Yeah, it will. And I'm totally convinced that it will be. And it's going to be, I mean, I wish I could, don't you wish you could go in the future 30 years from now and look back and just be like, oh my gosh, like it's crazy where we were and what we think of as normal right now. And I think of too, like we talk, I whine all the time about the US dollar and our monetary policies. It's still the best crack house on the crack street. Hat tip to Greg Foss. Imagine being in Venezuela or Lebanon or Turkey or any South American country or any African country where their governments, not any, most of those countries, where their governments are just literally crooks and they're stealing the purchasing power from their citizens. And they're just used to high levels of inflation, higher than anything we've experienced in a very, very long time, or hyperinflation. And they're just used to that. You're in Argentina, you've been wiped out several times. If you're, if you're 50 years old or older, you've been wiped out. Your life savings have been wiped out multiple times by your government. That is just unconscionable. Like, I think that's insane. And someday we're going to look back at that and be like, why would you have people in charge of your money? Like, that's insane. Like, of course they're going to do what's best for them and not what's best for the rest of us. And that's what's so beautiful about Bitcoin. It's decentralized and it's this unchanging, immutable, programmable money that is what it is. It's open source. Everyone can see it. Everybody knows what the monetary policy is. Of course, that's the way money should be. Like, it's insane that it's not like that. It's insane that we can just print money and depreciate our assets and then lose our purchasing power over time, when you could just have something like Bitcoin that does the exact opposite and appreciates in value over time and preserves your purchasing power over time and space. I'm really going off. Sorry. I think I've had a lot of coffee today, so I'm...
No. Drink more. Also,
yeah, more.
We're technically supposed to end in 3 minutes, but if you don't have a hard stop, I would love to keep going.
Sure.
I'll totally understand if you do.
Yeah, let's say about 15 or 20 more minutes, and then I got to do some end of the day trading in my fund.
I feel that. I was complaining last week about the time of our show because I'm like, you guys make me miss Power Hour every fucking day.
It's tough. Life is tough.
What are you looking at? Like, just so I know what to look at. Not as financial advice, just financial information. Just not insider information.
Wait, are you literally asking for free alpha?
I'm not asking for free alpha. I'm just saying, like, what's on his watch list? What's on the hit list that Jeff has to go and look at the chart? No.
Guys, you want to know something? I literally have a watch list when I say that, and I'm going to flash it quick right here. Okay. In case anybody pauses it and tries to steal it. I literally have it written down, handwritten on a piece of paper, because I'm still old school and that's how I remember things. And I have it sitting in front of me, and that's how I do my trading. So I break down my Vailshire accounts into never sell. Obviously, Bitcoin is one of those, and then a bunch of other companies that to me it doesn't make logical sense to sell. Because they just generally have low volatility, and in general, like, you're just going to have tax consequences for no reason. You just hold them through. They're great companies that you want to hold during a stagflationary decade. So I have those. Those are kind of boring companies that there's no alpha there. They're just good companies that will do well. My momentum trades are the interesting things. And then the third thing is my hedges. So I have those three categories. All of my hedges are on fire right now, obviously, right? As the markets crash, my hedges are just crushing it. They're doing really well. I've said this already: short innovation stocks, short mid cap, small cap, short the S&P 500, double short NASDAQ. I'm long the US dollar because that's what people buy when they're scared. Short block, BLOK, that's the blockchain ETF that has miners and then exchanges in it as well. And then things like NVIDIA and other things that are kind of crypto-ish kind of things. So I'm shorting that, shorting financials, shorting housing stocks. Those are all my hedges. And then my watch list, so the things that I'm waiting to buy, salivating to buy because they're down literally 70, 80, 90%. And when the markets turn, these things are going to go up 100%, 200%, 300%, I think, in very short order. So those kind of things are basically all of the Bitcoin miners. And I'll actually just give you some free alpha for people. Again, not individual investment advice, right? This is just me and my opinion.
You're just saying words and what
I'm
people want
just
to do with
saying
them.
words. I'm reading off words off of a page. It's meaningless. So some of the miners that I like, and I love supporting Bitcoin miners when they're in bullish trends, and they're very much not right now. So I'm not buying these right now, but I will when the momentum changes. I like Clean Spark. I like Core Scientific. I like Hut 8. I like Iris Energy. I like Marathon. MicroStrategy is an easy one. And then I like Silvergate, the bank that supports a lot of Bitcoin stuff. Although I'm concerned they're going to start delving into too much crypto stuff, but that is what it is. So those are the miners that I like best. And I think, like I said, these things are down 70, 80, 90%. I think they're an easy double once we flip. And so I'm watching those very closely and hoping that they bottom sooner than later, but I'm skeptical that they do. Those are my things. And then as far as some tech stocks, I'll just throw out a couple names that I have on my watch list too that I like. I like Mercado Libre. If you know Mercado Libre, it's sort of like the Amazon e-commerce main company of kind of Central and South America, and the CEO is a superstar. I like him a lot. Nvidia, I still like. Shopify, I like Block, which was formerly Square, which is Jack Dorsey's company. He's doing everything Bitcoin focused, so I can't wait till that gets out of a downtrend. And then I actually like Tesla. Like, I think that's a great long-term holding, but I only own that as a momentum trade. So right now that's in a bearish trade and trend as well. And then finally, I'm long some like oil and gas companies as well right now. Couple that I like. I'll just give two more freebies away. Actually, I'll give three. So two, Chevron and Occidental Petroleum, two oil and gas companies. Why do I like those? Warren Buffett likes those, and he buys those when they're cheap. So they have sort of like a Fed put. They have a Buffett put. So when the price goes down, you know that he's buying those companies. He loves oil and gas companies as well, and those are two of his favorite that it holds large positions in. And then actually, I think bringing it back to China, China is sort of on a different business cycle and macro cycle that the rest of the US especially and the rest of the like European world are on. China is starting to come out of stuff, and they're starting to do some easing kind of things. So I think Chinese stocks, which have been absolutely just decimated in the last kind of year and a half to 2 years, they're actually starting to show signs of bottoming. So I would say keep an eye on Chinese stocks. FXI is a ETF that has kind of the largest Chinese stocks, and then there's a small one called Pinduoduo, PDD. I like that one. That's actually that's the only stock that's non-US based stock that I own, and it's in a full kind of bullish trend, although it's just getting hammered today. So we'll see if it lasts, but keep your eye on Chinese stocks. So that's all the alpha I can give you. You basically know most of my plan right now. Not individual investment advice, infotainment purposes only.
Everyone's making fun of me in our company chat right now. They're like, "Are you just so excited that he's actually telling you the actual stocks?" I'm like, honestly, I'm just validated that half of the stocks he's listed are either I own or are on my buck slip watch list.
Good.
I love it.
It's awesome.
I've never seen you this happy before, Q. This is literally like.
Well, I'm also kind of realizing like I might actually be able to trade during power hour because we didn't get a follow-up guest for today. So,
ooh, nice.
Let's just say my portfolio needs it because.
Do not try to trade, my friends. Just manage your cash flow.
Don't trade Bitcoin.
Do not trade Bitcoin.
Don't trade Bitcoin, but like if you want to try to get wrecked and lose a bunch of money, like I'll give you an E-Trade thing.
Oh God,
whatever.
So wait, on a totally different topic, there's a great question that came up, which there we go. I was able to throw it up. So someone asked, how do products like synthetic Bitcoin affect the overall total market cap and price discovery? And will these need to be flushed out before Bitcoin can recover? What do you think?
I think Bitcoin derivatives are absolutely inevitable, and they're just going to increase in number and size and scope. So they some of them will get flushed during bear markets. Some of them, will kind of go away. But for the most part, this is a trend that can't be stopped, right? Wall Street now has gotten a hold, it's gotten its fingers, its claws into Bitcoin, and it wants to make products that profit off of the rise of the next great king of assets. So I think I don't get too bent out of shape. I see a lot of people getting really worked up about that, and maybe it's just because I come from the world of finance. I'm like, well, yeah, that's just how it works, and that's just what's going to happen. You can't stop this kind of like innovation of financial products, whether or not it's innovation. Certainly not necessary, but it's what people want, right? Bitcoin is everything people need, but then Wall Street and crypto and all that other garbage, that's what people want. They want to speculate. They want to, gamble. They want cartoon apes in their folder, and they want baseball cards. All this kind of stuff. That's just how people are sort of wired. So as long as there are people like that in the world, and I think we will always have those people with us, these other products are going to pop up, even on Bitcoin, much to the chagrin of those of us who are kind of purists, right? We just want Bitcoin to just be Bitcoin and put it on your in cold storage and forget about it and don't bother me. That's not going to happen. There's all these new products that are going to come in, especially that they're going to do this spot ETF at some point. That's going to literally trillions of dollars are going to pour into Bitcoin, into the space at that point. And every kind of conceivable product is going to come online as well. So I don't get bent out of shape about it. I think it's interesting to try to pick and choose, and that's what I do during the day. Is I tease out the good companies and the good products, and think about what kind of investments I can put in my Vailshire accounts. And I don't really worry much about it. So I don't even know if that answered the question, but I think it's inevitable. I guess that's my base answer, and don't worry about it. I don't think it's really going to affect the price of Bitcoin though, other than to bring in more volume into the Bitcoin space.
Do those things have a material impact on the price of Bitcoin? Like, are we capped? Like, let me rephrase. In your opinion, do you think Bitcoin could have reached 100K if there were less altcoins out there?
I don't really buy that argument very much, and I know that people are very passionate about this. I think we didn't reach 100K because the macro changed. I see everything through my macro. I think we were going here. I got a couple of things. Well, I talked about this months ago, but if you look at the chart of Bitcoin, I think when you go back to April of 2021, it was on its way to going parabolic and was going to go to 100K and well beyond that. And then literally out of left field, black swan event. And I truly think this was a black swan event when China banned Bitcoin miners and literally banned them, not just fake banned them, said, oh, we're banning Bitcoin. They literally kicked the Bitcoin miners out of the country. That was a literally out of left field thing that just punched Bitcoin in the face, and the price dropped 50%. That had nothing to do with macro. It had nothing to do with the network growth. It had nothing to do with any of the fundamentals of Bitcoin, and it just punched it in the face. It was like, the Mike Tyson, like you had a plan and then everybody has a plan until you get punched in the face. The plan was to go 100K and higher, and then China came out with that. So then it took a few months, and I kept saying to people, like, the macro still looks good right now. At some point, we're going to bottom and we're going to make another run higher. I thought we might get there by Q4 of 20. And I fully admit, I was one of the people who thought we were going back up to 100. But then it took me a little bit to figure this out. The macro changed. Bitcoin sniffed the trouble under the hood for the coming Q1. You remember Q1 of 2022, the GDP numbers just came out. It was actually negative 1.5. It got revised from negative 1.4 to negative 1.5. Bitcoin figured that out all the way back in early November. It's like, oh crap, things are actually looking kind of ugly. It looks ahead. Markets look ahead to what's coming, and nothing looks ahead more than Bitcoin does. So it figured that out, and that truncated the run higher. That's why we didn't get to 100K. That's why we didn't have the parabolic rip higher. That's what I think. And so then when it started to get ugly again, and people were like, oh, you know what? Bitcoin will never get below the lows that we saw in July. This is back when Bitcoin was still like 40,000. And I'm like, that is not true. Like, the macro sucks now. The macro was good back then. It just got punched in the face by China. Bitcoin did. This time around, the macro is terrible. Do not use 28, 29 as a line in the stand. It's absolutely going to break through that again, and it could go lower because the macro is terrible. That's where we are now today, right? And so, man, I'm doing this today. I don't even, what was the original question? Am I still talking about the same thing? I can't even remember where I was
Embrace the
going.
darkness.
Was I going to say anything else about that? I don't know. I don't know what the original question was. Sorry. But that's my take on why we didn't go parabolic at the end of 2021. I think we were going to go parabolic, and first China hit it, and then as it tried a second ramp higher, then the macro changed, and then everything changed at that point.
I could buy that argument. I'm gonna same question but different rationale. And if you want to be like, I already answered this question, Q, shut the fuck up, that is also a valid answer. But what effect does excessive leverage, in your opinion, have? We got into this debate and discussion before you joined us. I'm curious if you think leverage positions in Bitcoin are affecting our potential high price points.
Yeah. So first, a couple things. Number one, don't use leverage with Bitcoin. Please, if you're in the audience listening to this, don't use leverage with Bitcoin. Okay. Only a few people can pull it off, and it's not you. Don't do it. You're the chump if you're the one using leverage. Number two, leverage is a double-edged sword. So during a bull market, it helps the price to go higher faster. During a bear market, it causes the price to go lower faster. So it works in both ways. So I will tell you that people literally make a living looking for leverage to get built up, and then they cause fear by putting in market orders and doing things. And that's when you get the LLLC, leverage long liquidation cascades, that are famous in Bitcoin, that, like, you feel like you're going to die because you watch the price drop $10,000 in a couple hours, things like that. Those are part of what markets do. People call it market manipulation. I think that kind of makes it sound too shady. I think it's sort of, people see sort of an obvious low-hanging fruit, and so they go and pluck it, and they say, wow, there's a ton of leverage being built up. People are way too optimistic. Let's cause a leverage long liquidation cascade and drop the price. It's the same thing on the opposite side of short squeezes. When so many people are shorting that, people will look at that and they'll be like, you know what? There's way too much pessimism right now. It's gone too far, too fast. Let's cause a short squeeze. And there are big people with large amounts of money, huge fund managers, way bigger than stuff that I manage. And they do that stuff just for fun and to make a quick, a couple $1 million here and there on a given afternoon. So leverage is another just inevitability in the financialization of Bitcoin. It's going to be with us forever, probably. But I do think leverage, the use of it, will kind of go away over time as we get off of the fiat system and off the fiat way of thinking. We're just all used to it. We literally have a government that encourages us to take out leverage, take out loans, and to buy crap with. That's what Keynesian economics is. Like, we have this credit-based money. Take out a loan, buy a house. We will give you tax breaks if you do that. Take out a loan, buy crap. We love it when you do that. It raises GDP, blah, blah, blah. It's obviously terrible in the long run, but it's great in the short term. Bitcoin flips all of that on its head. I think leverage, the use of leverage, will go way, way down on a Bitcoin standard because you don't need to do that. You won't need to take out loans. I think the prices of everything are going to come down to reasonable levels because nobody's going to give their Bitcoin to buy a crappy stock that's way overvalued or buy a house that's 3 times higher in value than it should be. All of these things are going to come down, and we're going to get to the point where you can actually save up Bitcoin and then someday just buy a house because you worked hard and you saved for several years. You'll be able to buy a house because they'll be priced reasonably in terms of Bitcoin. Again, a long-winded answer. So leverage is inevitable. It will be used less and less as we transition to a Bitcoin standard. And please don't use leverage if you're just a regular person. You'll get wrecked. And you'll probably lose your Bitcoin, and that would be very sad.
Dylan,
And eventually a kidney.
Yeah, and you'll need to sell a kidney.
Dylan LeClaire, stop buying on leverage.
Dylan, don't do it.
Jeff, as we wind down, is there anything that you wanted to talk about with us, or you wanted to share that we didn't get a chance to ask you or think to ask you?
I was a little surprised you didn't ask me more about Italy.
All right. Best meal you ate, favorite place, and where should we not go?
Ooh, wow, that's good. Let me start with best meal I ate is, I don't know if you guys are steak eaters, but I had a really, really good steak in Tuscany. We were in the Tuscany countryside. It was fantastic. We actually started in Rome, went through Tuscany up into Firenze or Florence, and ended up in Venice. I would actually say that Venice was, after you get through the initial, oh, that's cool, there's waterways everywhere, I thought it was kind of disappointing. There wasn't that much to see or do there. It was cool to just sit by the waterways and just check out the water. That was cool. But I thought my favorite part, to my surprise, was actually the Tuscan countryside. Like, it's so fertile and so beautiful, and I'm like, man, I could hang out here for a serious amount of time. Like, I could see going with my wife someday when my kids are a little older, and just ditching them and go sitting on some farm somewhere and kicking it and doing Vailshire from some olive vineyard or
We said Italy one
olive
too
orchard.
many times, and now the resident Italian has appeared on our screen.
All right, let's hear it, Chris.
Yeah, no, I agree with Jeff. I was in Venice for a few days. It's good to do for a few days. It's very cool, but it definitely like loses its luster. It's small. There's like not a lot to do on Venice itself. I had very good meals there as well, but yeah, no, I agree. The Tuscan, like the countryside there is awesome. Firenze is really cool. Yeah, so many great parts of Italy.
Yep.
So you guys hung north then, right?
We did, yeah. We stayed north the whole time. Oh, the one other thing I did is every restaurant I went to, I tried their tiramisu because I'm a big tiramisu fan, and I didn't have any bad tiramisu the entire time. So
yeah, it's good stuff there.
Thumbs up to getting tiramisu anywhere in Italy.
I'm like, I feel like you guys have this perspective of like American cities because they're just so large and overwhelming, and I kind of feel like there isn't, if I remember Italy correctly, 10 plus years ago on drunken stumbles around, like all the cities are really small. Is there like, is Rome insanely big and I'm just not remembering it?
Rome feels big because it's so crazy and crowded and chaotic feeling. Like, you're just zipping around in your little cars and getting near accidents kind of all the time. The history there is obviously awesome. Just fantastic. But I could never live in a place like Rome because it's just I need more elbow room. But I think Florence, if I remember it, I think I looked up the population when we were there, and it was around 400,000. So it's a pretty decent size. It's not huge, but a decent sized city. And that was a nicer city, like less chaotic feeling and a little more organized, maybe. I don't know.
Yeah, I'll say like Q to that. Like it's a small country. It's very tiny. Like Italy could fit in like basically like New Jersey, the equivalent in the stateside. So,
Shut up.
Yeah, dude. I mean, it's
That's how
long,
small
but like
it is?
it's long, but you could like break it up and kind of basically fit it in New Jersey. It's
Okay.
not that big of a country. Like, so yeah, I mean, it's not like cities in the States. Like, Manhattan alone has like 8 million, 9 million people there. I mean, I forget how many people live in Italy total, but yeah, their cities are different. You're more compact and on top of each other, exactly to Jeff's point. But Milan's
59.5 million people in Italy, the whole country.
Yeah.
My friends, Italy is a beautiful place.
Bitcoin is Venice.
Ooh, wait,
I'm
wait,
just saying,
wait,
we
wait,
tie
wait.
it back into Bitcoin.
You fucking did it. I was going to say, but let's tie it back to Bitcoin.
Yep. Okay, I got. I don't know if are we wrapping up here. I should probably get cracking here. Oh, Bitcoin is Venice by George
There
the
you go.
artist. That picture too.
Yes.
Ooh, nice.
Yep.
Jeff, I want to give you the chance to, go do your actual job that pays the bills. Thank you so much for joining us. Give everyone your Twitter handle. If you're not already following him, follow him. If you want to, if like me, the moment where he was sharing his trades and then that type of stuff was very interesting to you, give him a super follow because I know that you've been doing a lot of work for sharing some of your trades and giving those super followers some different access than your regular followers.
Yeah, thanks. Thanks again for having me, guys. I always love hanging out with you. It's fun to talk. And I'll obviously talk anybody's ear off about Bitcoin. Can find me on Twitter at VailshireCap, VailshireCap. If you want to learn more about the investment strategies that we do over at Vailshire, you can just shoot me an email. If you do info@vailshire.com, it'll come to me directly. If you want to learn about the separately managed accounts or the hedge fund, that would be cool. I guess my final piece I just want to leave people with too is I get asked all the time what my price prediction is for a bottom in Bitcoin and are we there yet? And I would just say, first of all, I don't know. Nobody knows either. Don't worry about that. Quit focusing on picking tops and bottoms because you'll never do it and you'll never do it well, even if you get lucky every once in a while. Focus on value versus things that aren't of good value. Right now, as we alluded to much earlier in the conversation, the US dollar is very richly valued in the short term, even though in the long run, it's guaranteed to go down to zero value. Bitcoin is very undervalued and cheap in the short term, even though it's guaranteed to approach infinity over time mathematically. It's the biggest no-brainer trade, I think, of the decade, is to take your overvalued US dollars or whatever fiat cuckbucks you like to use and put those into Bitcoin while they still have value. Bitcoin is here to stay. Fiat is not here to stay. Not individual investment advice, but open your eyes and look at the opportunity that's in front of you. And I can almost 99.9% assure you that you will do well if you follow that strategy and just chill out.
Jeff, thank you so much for joining us. We're going to cut to a quick commercial break, and the three horsemen will be back to break down some more news. So stick around.
Thanks for having me, guys.
Thank you again, man.
What's up? We're back. Thank you for sticking around through that commercial break. We hope you enjoyed that interview with Jeff Ross. We're going to continue our news and notes segment, but first, if you are not already, make sure you smash that subscribe button down below. Smash that like button on YouTube. We are about 4 likes away from releasing some more sats. Over on Rumble, we're about 20 rumbles away from releasing some sats. Chris, should we throw some sats out to our loyal Twitch family?
Yes, definitely. I'll get on that right now.
Thank you, sir. Thank you all for sticking around through this. Well, Chris will come back in just a moment once he gives away some sats. But again, smash that like button and obligatory shills so that we can keep our job. Buy your Bitcoin 2023 ticket. Ticket prices are going to go up, I believe, next week or at the end of this week. Doesn't matter. Just buy them. Use promo code FOMO to get 10% off of everything in the Bitcoin Magazine store, not the ticket prices. It's Monday. I misspoke. I've been frantic. You've been frantic. Cut me some slack there, guys. Yeah, I think that's it, right? Because Bitcoin Day already happened. Cool. Now, back to the real world. So we've talked Celsius a lot. We've talked the Bitcoin price a lot. A piece of news we haven't really talked about that I think is very, very worthy are some of these layoffs that you're starting to see happen. We saw a couple of weeks ago Gemini say that they're going to cut 10% of their workforce. We saw Coinbase going through the ringer, sending out job offers only to rescind them shortly afterwards. Now we're seeing
so fucked up.
But then today we're seeing some more reports about I believe it was BlockFi laying off 20% of its workforce, and then another company laid off another 10%. I'm trying to pull up the tweet that I saw that essentially helped congregate all of this information. Thank you to Genia_XX. So crypto.com laid off 5% of its staff. BlockFi laid off 20% of its staff. Look, this is a very strong indicator to me that we are in the depths of a recession, that certain companies had overreached on their growth objectives, and essentially their growth was unsustainable, no different than the general markets. Um, it's telling that this is not just um, a Bitcoin or a crypto industry thing. This is across the entire tech sector, and it's very, very telling. We hear the numbers of, oh, unemployment's at lows and this and that. By the time they report and tell you that, oh, by the way, the June unemployment numbers and the May unemployment numbers came in worse than we were expecting, like it's too late. Those events have happened. So just something to really be mindful of as you hear things as you hear certain statistics that are shared with you, and then they use or say, well, unemployment looks good. Just have these things in the back of your mind because you have more people entering the unemployment lines. I don't know if I'm being hyperbolic in either of your opinions or if this is something uh, that is worthy to be paid attention to.
I mean, well, I think there's two factors that are, or there are multiple factors here, and at least as it relates to the Bitcoin markets and Bitcoin companies, anytime we enter these bear markets, companies that have significant amounts of Bitcoin in their treasuries or that rely on Bitcoin tend to have these cost-cutting measures. Staffing tends to be one of the highest costs in any business, and so it's just part of the cycle in my mind. Ideally, you're part of a company that has used appropriate treasury management techniques, and so they don't have to do massive layoffs. But that's a hard learned lesson, and it takes a number of cycles for any company in the space to learn how to effectively do that. It's something that Bitcoin Magazine, we certainly put a lot of effort into, and we were able to build out our strategy so that we didn't have to do layoffs when we entered this bear market. But I think you're just seeing that play out in the broader Bitcoin company market, in the Bitcoin sector, I should say. But it's just part of the cycle, And then I think compounded on top of that, you have, as you mentioned, the fact that we're kind of entering into a recession, and that layers on top. So,
Yeah, I think it factors in as well. When you think of the Federal Reserve, they have two mandates. They have employment, and they have I guess, well, it's employment and not interest rates. It's employment and economy, I guess, or inflation. Duh, I was drawing a complete blank. So obviously, inflation's out of hand, and interest rates are pegged to zero. Now they seem to be fighting inflation, but now we're seeing tech companies and crypto companies abroad starting to lay off people. Also, I just want to say, like, rescinding offers of people that are already accepted is like the worst possible thing. Yeah, it's bad to cut your own staff. And for sure, like, that's not a great thing to do, obviously. But I guess you would think or hope that they have good ways of saying, like, oh, you're underperforming, and like, hey, like, layoffs are happening, we have to cut this division. And I'm not saying that's good, but imagine being like, you have no job, in the sense that you're at a place, you gave your 2-week notice, you potentially can't get that job back, or they know you want to leave, and you lost the job. It was crazy. It's just really, really horrible. So, but yeah, I mean, we can come into a part. Sorry, Akil, I'll kick it over to you in a sec. But so now the Fed is trying to fight inflation, and they're trying to keep employment high. But what if they have high inflation, jobs are being lost, and they're caught between a rock and a hard place? It's like, at what point does everything break? That it's like, we're lowering interest rates, people are still losing their jobs, and inflation's still going nuts. Like, oh, we try and raise interest rates, people are still losing their jobs, inflation's still going nuts. So they're at like the bottom ends of the tools of what they can do. So it's not good across the board. Send it over to you, Q.
I'll just jump in really quick and say, during the COVID crash, everybody was like, oh my God, they lowered interest rates to zero. It was an unprecedented action. Everybody was like, that's it, they're out of ammo, there's nothing more they can do. And then they invented these new systems to basically continue to inject liquidity and to stabilize the market. So I think that the interest rates are the loudest signal, and it is arguably one of the larger, or if not the largest lever that they can manipulate. But there's so many other systems that they can use to inject liquidity and to, as I said, stabilize the market. So I don't think it's as simple as now that we're at zero, that's it, they're out of ammo. Or there's a will, there's a way.
I mean, I do think though it's interesting because the idea of a negative interest rate is not like an unheard of thing. It has happened in other economies. I give Powell a lot of credit to never having taken that position, and very, very loudly in the early days of the COVID recovery saying like, I'm not going below zero, to P's point, because I have so many other things I can do, I can play with, or I can manipulate before I have to go there. And I think that's the larger issue with this that I really want people to take away from this part of our conversation is there are an infinite amount of numbers that they could present to you. There is an infinite number of possibilities that they could show you and say, we are in a recession, the economy is booming, every flavor in between and beyond those as well. So, with that in mind, when they come out and say things like, we're in a recession, unemployment's at new all time highs, this is because they have thought through and want to tell us that. Like, to
I mean,
understand
yes and
unemployment.
no.
Well,
Like they can certainly, to your point. I mean, they can. There's not an infinite number of statistics.
fine,
they can
infinite,
throw out.
but like there's
But
an
there's many.
endless number
There's a
because
number of them.
like, the unemployment number is one that I think gets conflated too much. People just take it as literally like, how could you fake this? Until you realize like, well, actually, by definition, to be unemployed doesn't mean you're out of work. It means you're out of work and looking for work. But looking for work means you're trying to be employed by someone else. Well, what about those entrepreneurs who are unemployed and starting their own business? And what about those people who are getting paid under the table? What about the people who are just working part time, shuffling through a bunch of different places? There's so many different layers to unemployment, but we just accept this. Hey, the unemployment number as is at lows. It's like the version of unemployment that they want to present to you is at lows. But
Yeah,
there are
absolutely.
other numbers that are actually at highs that would suggest that unemployment is a problem. So like one of my favorite things to look at is the difference between the month over month change in hospitality jobs, because those are typically some of the lowest level recorded jobs. You also then have other types of jobs like agriculture. Like let's be blunt and completely honest here. Like most of us have someone Hispanic or just someone lower income working, coming into your home and cleaning it, if that's like the type of lifestyle you live. You have gardeners and stuff. Like those people aren't necessarily falling under the purview of the unemployment office to see how their numbers shack up. And so you can look at things like, all right, hospitality. This number is actually increasing versus blue collar workers are decreasing. So that's a signal actually that your biggest spenders, your biggest money makers, if you will, are losing their jobs and your smallest money makers are increasing. That's sending me a sign that, hey, a lot of these blue collar workers or a lot of these white collar workers can't afford to not have an income to pay rent. So they have to go and get a job waiting tables for the time being. But in reality, like they're waiting tables in the interim to eventually go back and get a new career or a new job. That's not reflected in unemployment, but that's a strain on the economy nonetheless.
Yeah, I mean, I think the point that you're making is the good one, which is that we were talking about this the other day around the official reporting on things like M2 money supply. What ends up happening is if a if the facts don't support the narrative that the government wants to present, they simply change the facts, or more accurately, they change the measures used to back up whichever facts they want to present. So when the M2 money supply started reflecting the fact that more money has been printed since 2008 than in the entire history of this country before it, they simply do things like change the definition of M2 money supply, right? And they publicly acknowledge that they're changing the definition of M2 money supply. They discontinue the previously used M2 money supply, but most people aren't aware of that. Most people aren't tracking on that. with unemployment numbers. They can change, I don't know if they have done this, I'd have to look it up, but they can, to your point, Q, like change the definition of what it means to be employed or unemployed. They can change how they collect that information. They can change how they report on that information, the frequency with which they report on that information. We saw this with COVID numbers, right? The definition of what it means to test positive for COVID has changed over time. The number of cycles that they put I believe it's the PCR test samples through was changed dramatically when Biden was elected. The argument can be made that that was done to make it look like right after he was elected, COVID numbers started dropping, but they actually changed I won't go into the details too much, but they basically changed how many, as I said, PCR cycles they ran each sample through. Now, there may be justifications for that. Some of the times when they change these metrics, there are, but in aggregate, they can be used very effectively to change the apparent facts around a situation. And we should all expect that is exactly what is going to happen. So when you're given these numbers, they can be manipulated in order to support whatever narratives are desired.
Yeah, I wanted to share this aside. Like, I'm not shy about it. I got laid off actually before COVID. I didn't even get laid off because of COVID, and I was paid out for the remainder of my contract. So I was paid out during that COVID time when everyone's like scrambling to find a job. I did not get listed under unemployment because according to payroll, I'm still employed by my former employer, but in reality, like, I'm aggressively looking for work. Also, I literally had a job offer that I countered, and I thought when they pulled it at first, did I just counter too aggressively that made you rescind a job offer? And no, it was because they just laid off like half of their employees due to COVID. So for anyone who is dealing with that at a Coinbase, I feel you. I really do feel you. It's a shitty situation and a spot to be in. But be sure to check out bitcoinerjobs.com. We at BTC Inc. are hiring a ton of new positions. There's countless jobs available for Bitcoin focused companies. And I'm going to just say it like this, but you do play stupid games, get stupid results. And when you dabble into shitcoinery and the majority of your business relies on shitcoinery and gambling, what happens when no one shows up to the casino? You don't make money. So I think there will quickly be a separation of Bitcoin focused businesses and broader crypto offerings. Do either of you see a potential schism in, hey, Bitcoiners just don't deal with these businesses at all, or will there have to be some sort of middle ground found? And specifically talking about Alex McShane's company, Coinbase.
I guess your question's like, is there going to be a schism between Bitcoiner companies, crypto companies, and traditional companies?
We can ignore the traditional companies for the sake of this exercise.
Yeah. Then I think, like, you play stupid games, you win stupid prizes. So if like 95% of your business is based on faulty fake land, things that are going to fall apart, that's kind of like not a very sturdy. You're building your business on quicksand or like an unstable foundation. I guess could that 5%, if they're successful in the Bitcoin side, keep them alive? I guess, but I do think there's going to be and maybe I will tie it into traditional companies. There's going to be a marrying in of traditional world and the Bitcoin world, or at least that's what I suspect. Because when you have the US dollar, the ultimate shitcoin, like, to Jeff's point, he mentioned it, like, the US dollar is programmatically being printed into infinity. Whether we see it in our lifetime or whether we'll be dead, it'll be 100 years, 200 years. P makes a very good point that they have ways of helicoptering money. Maybe they start, like Q brought this up in multiple episodes, they start forgiving student loans. College is free now, so all the burden that you had of that debt, but then that goes on the taxpayer's balance sheet. So it's, whether you're forgiving debt one way, you're taking away an asset from someone else. So I guess my 2 cents is we're in a transitionary period, and many people have said this better than me, but basically, as your dollars are going printed into infinity and worth less, like, yeah, the US dollar is the best fiat currency, but like, think of the wheelbarrows in Venezuela when they're like wheeling the wheelbarrow to get food, and then people like dump out all of the paper currency, and they steal the wheelbarrow because it's more valuable. Like that will happen to the U.S. dollar on a long enough time horizon. Like I said, it's less likely maybe in our time frame of life, but maybe 100, 200, 300, 400 years, however long. Like we don't know when it's going to end, but in a long enough time horizon, that will happen. So I think as you transition from one money to another, there's chaos. You go back to a normal barter system of I have chickens, Q needs that because we can't transact in the money because he needs a house full of money in order to give me money for the chickens. So I give him chickens, it breaks down and then a new money is found and that starts getting used going forward. Hopefully we can mitigate that window of barter to right from USD to Bitcoin, but there is going to be like a crazy chaos part of the end of the money supply. Sorry, that was a long-winded answer. Go ahead, Pete.
Yeah, I mean, I don't think there's going to be a period where it's like, where we go from like USD to like shiny rocks to Bitcoin. I think that, one of the reasons, as I said before on this show, that I'm super optimistic and that I think Bitcoin is a really amazing thing within this country is that I think that it will smooth out the transition from whether it's between world powers, or specific regimes within the United States. I think Bitcoin provides a sort of I don't want to say a leveling function, but it has the potential to dramatically decrease the rapid rate of descent. So instead of it being like a nosedive into the side of a mountain with the broader economy and with people's livelihoods, I think that Bitcoin is the best chance that we have to make that into a nosedive that can be, slowly pulled out of. There's another point I was going to make. Fuck, it's gone. Q, what was the question?
Will there eventually be a divide between Bitcoin-focused companies and then the broader crypto market companies?
Yeah, I don't think it's going to be a dramatic like light switch and then it's like everybody breaks out their pitchforks and their big wrenches with kitchen knives, taped to it, and then they start fighting. It's not going to be like an Anchorman style or Anchorman 2 style like showdown, right? I think that this is going to be a slow transition, and I think that we already see this, right? And I think it's pretty. I don't think that's necessarily a good thing. I think that it can be very insidious in that companies just shift their narratives, right? So, I think that it isn't. Very few companies are going to blow up in the way that Celsius is right now. What happens generally is companies lose massive amounts of money behind the scenes, and then that is kind of hidden from sight. And then there's a new company spun up, and a whole new brand of PR or a whole new batch of PR and commercials and whatever and narrative shaping, and then retail is kind of sucked in, and people are lazy, so they don't do their due diligence, and then there's just a new scheme that comes up, and we see this. It doesn't have to be like a Bitcoin versus crypto companies. We see this over and we have seen this over and over and over and over again in the current equities markets, right? And the incentives that drive. Jeff mentioned zombie companies. When I learned what a zombie company was, a decade ago, it blew my fucking mind. I was like, how is this possible? How can there be a company that is completely underwater and that has, is not profitable, but that is still is still operational and receiving more and more and more debt? And, we see this in the startup world, companies that could go on a long rant here, but I used to be in the startup world, as you've heard me talk about. There were so many fucked up things, or there are so many fucked up things that happen in terms of the startup world. You are failing if you are running a startup and your goal is to be extremely profitable. That is not the effective strategy. If you're focused on profit, if you're focused on effectively managing your cash flow, you will very likely be outcompeted and crushed by your competitors who will instead optimize for revenue. And the reason that's important is because if you optimize for a hockey stick revenue chart, then you are able to receive VC money because VCs want to see that specific, like, revenue is increasing massive amounts year over year. They don't actually give a shit about profits. They don't actually give a shit about sustainable business models or providing a great product. They just want to see that massive increase in revenue. So you get this really fucked up cycle where VCs need to park their money, which is, losing value very rapidly because of the amount of printing and other things that are going on. So they just are trying to, like, shove their money, their US dollars, into whatever investments they can find that have a chance of turning a significant profit when they flip them. So the entire market is basically driven to these really, I don't want to say perverse incentives, but really unfortunate incentives, because they don't actually drive the creation of robust businesses. They just drive businesses in the startup world to sort of have this constant churn cycle. So you start a business, you get acquired, you sell out, you start a new business. That's the model. And that can create these really unfortunate situations that we see. And it can prevent businesses that are more longer term from being able to compete. So there's a lot of arguments around, Bitcoin-based investments, what the markets might look like as we switch over to more of a Bitcoin-focused economy and Bitcoin-focused investments. There are already some really, really interesting VCs that are Bitcoin only, and they're doing really interesting work. So I'm excited for that. But I don't think it's going to be just Bitcoin versus crypto companies. I think it's kind of companies that are forced to participate in the existing monetary system versus those that are able to opt out. And it's not a 100% thing, right? Companies can, as they start taking on Bitcoin onto their balance sheet, as they start using it in their treasuries, it creates this slow transition into what I would consider to be a more equitable economy. But that's my 2 cents, my 2 sets.
Guys, I'm so mad. The question I meant to ask when Jeff Ross was here that we do need to talk about is MicroStrategy. So if I'm remembering this number correctly, and if someone wants to correct me in real time, I will fully take the I'm an idiot and said the wrong numbers, but I believe it's $21,000 is a margin call for MicroStrategy on their most recent leveraged purchase. However, they can deploy more Bitcoin to decrease that margin call limit. I think it's or maybe it's 20,000, but we're creeping up to that number. We did not cross it. Everyone and their mother would have sent a tweet, including our very own Nick Campmine and the Bitcoin Magazine news team. So we have not yet reached that level. I mean, it feels like a no-brainer. Like, he's just going to deploy more Bitcoin, right? Like, he's not going to let himself get margin called here.
Yeah, and also it depends on the terms of that loan. So he would probably just deposit more Bitcoin to prevent the margin call from happening. I think he said something recently that he's like, their true margin call is like 3K Bitcoin or 3.5K. And I think that's to the point of if he's depositing all the Bitcoin to cover the leverage or the loan margin call. So I think this is not Michael Saylor's first rodeo. I think he's smart. I think he sees the thing blowing up with Celsius. I don't know what he's done in the background, but I assume that their risk managers or whoever at the company have moved more Bitcoin to cover their collateral. I think there's a lot of people that think that it's going to hit that number. And Greg Foss makes this point when you see, and even Jeff made it today, when you see blood in the streets and you see that there's a number you can hit and then you're going to make a ton more money because it's going to drop further and you get the short, like, he's like, I think he would realize that, like, they're trying to get him at this 21 mark. And then, in a theory, Michael Saylor can win that trade. So they get to 21 and then it doesn't fall out. And Michael's like, oh, it was actually to 18K. So the shorts that they have, and all of a sudden it starts going the other way, that would be, long-term holders or people that are long in the stock or long the asset, then start to win in the opposite direction. So, while hedge funds try and definitely get to certain benchmarks or targets that they see that they can hit, people can put other things to get around you to protect themselves.
Yeah, we fucked. maybe the market needs Michael Saylor to lose some Bitcoin though. Like maybe that is.
I mean, he has it on Coinbase. If Coinbase goes under, technically he's in institutional custody. And if they imagine they try and take it as part of bankruptcy.
I mean, I think now we're just like, yo, what if the lizard people? I mean, we're right.
Okay, fine. You're right. You're right. I smoked too much weed this weekend. I'm not high enough to carry this conversation. But we will put a pin in this for the Friday stream. All right. We'll put a pin in this.
I got one last thing before we wrap. One unprice related thing, non-price related. So we are at block height of 740,648. That means we have less than 100,000 blocks until the halvening. The halvening's happening at 840K. Just kind of a cool coincidence. We're more than halfway across the chasm of 210 blocks. P, I don't know if any thoughts there.
No, I love it. I really want us to start like reporting on some of the Bitcoin related metrics, and I think block height and percentage to halvening is a fucking fantastic one. For those in the audience, if you want a super information rich, high signal dashboard, I personally love Clark Moody's dashboard. If you just Google Clark Moody Bitcoin, you'll find his information dashboard. Yeah, love it, Chris.
I love BitBo. It has a lot of good stuff about Lightning, mining fee, and stats on there. It differs a little bit. Like they're not synced up properly with Clark Moody, so I compare the two if I'm ever like in questioning things. Don't trust, verify. But I like Clark Moody's and I like BitBo are the two that I like.
Oh, somebody just made Hammers. I just made a joke in the chat. He said, "Lol, micro tragedy." I think that's fine. I like that.
That's a good one.
It's a small one. It's not like a big tragedy. It's a small one. All right, that's all I got, my friends. I think we should end on a high note.
I think so.
Call it a day. We will definitely be back online either on Twitter Spaces or potentially, if you guys play your cards right, maybe back to another YouTube or rather Bitcoin Magazine live show, probably just on Spaces. Follow Bitcoin Magazine. Follow us. Links are in the description. That's all I got. Q.
Yeah, I have no idea what P's talking about. We might go on Spaces, but you will absolutely not see my face on camera for the next 21 hours. But thanks for tuning in. Stay humble. Stacks hats.
Let's fucking go.